with that, allow me to get right to the nitty gritty. Let me get right to the point here, because actually Fausto Puglisi, president and founder of Cyber Trading University, was supposed to be on here. And for a lot of our attendees here, you may be unfamiliar with myself. So allow me to get my webcam up and running here perhaps as well. Great to see all of us here. My name is Josh Levitan. I'm a 9-year pro trader here at Cyber Trading University. But before I even show my PowerPoint, let's just start right here with Tesla. Who here was following Tesla going into the morning today? Of course, we had their earnings report yesterday, so I'm certain a lot of us were, but I'm going somewhere with this because, not to name the student, but one of our members inside our live trading room yesterday had said, and it's all based on just bullish or bearish sentiment, but he had said that Tesla, coming off the earnings, would go much higher. Well, clearly he was wrong. Not everyone's going to be right with their sentiment, with their beliefs or thoughts of what a stock will look to do. Well, that's why us here at Cyber Trading University, myself and certainly Fausto Puglisi, we look to trade after this earnings report gets announced. So, there's no real gamble with holding going into the earnings, especially if you're trading options with that, because you can't trade the extended hours and pre-market hours with that. But the question is, even if you were wrong with that sentiment, do you know what Tesla will do going into the market open today? Us here at Cyber Trading University, we never know for sure. But what we do have are two powerful tools that we could look to show you here today, level 3 and level 4. And that gives us the best ability to locate where the big orders are, where the big sellers are that could be squeezing this down, but also the big buyers where we could potentially anticipate a bounce. So let's get right to this actually here. I'll show my NASDAQ book viewer here to begin. This is what myself and Fausto nickname level 3. And across the morning from the market open section here into right now, well, we'll scan through this. And typically for a more expensive stock like Tesla, you're going to find larger buy orders and more orders collectively out there around these round number prices like 271. And then just recently, if I were to scroll back a little bit further here at this point, there we go, right at 270, 238,000, 238, 246 and counting buy orders showing up there right at the price 270. I'll even take a little snapshot of that coming up just so it's on a still shot, makes it a little bit easier on the eyes. Of course, the PowerPoint I have here will go through it all in just a moment, but at 270, there's about 12,000 shares on the bid at the price for about 259 total orders making that up. Now, if we're able to see this ahead of time, just as the market's opening up, as Tesla's dropping, shouldn't it provide you more of an opportunity to sit on your hands as this is continuing to drop? Shouldn't it provide you more of an opportunity to feel confident to at least attempt the entry to find support? So if you're bullish on Tesla long term, okay, this type of drop off provides a really good opportunity to anticipate a bounce or a move up. Of course, the market's pulling back right now too, could allow Tesla to make a sharper drop off over time, perhaps tomorrow or going into next week. But with that though, it's not just level 3 that we have what's called level 4. And level 4 here basically paints all of those orders that you saw on level 3, the NASDAQ book viewer, onto a heat map here. Makes it that much easier for you to locate where the big money is. So for instance, really quick, prior to the market opening up this morning, just right at 9 o'clock, 8:45 and so forth this morning, there was about 50,000 shares on the bid at 275. That's your first support. So if it breaks under that, what's your next big level? Well, just look right here, this fat orange line here, and it represents a 52,000+ share order on the bid. Now, these are what are called iceberg orders. For myself, for Fausto, and our students that we train inside our live trading room, well, hey, if we happen to see this hold at 275 and if the market's bounced, then perhaps this could provide a great entry. But that wasn't the case when the market opened up this morning, folks. At first, it pulled back and it smashed right below this big support. All right, well, when a stock breaks through a big support, a big floor, and it crashes, well, a floor should become a resistance over time. And, hey, this actually just made lower highs and continued to drop. And here we are right now, right at the next major level of support at $270. So, hey, this could provide the next bounce to where we see Tesla move back up a little bit higher. But if you don't know where these orders are ahead of time, it's never going to give you a strong ability to anticipate and confidence for you to be trigger happy and actually take the trade. It's going to allow you the chance to kind of sit back in the driver's seat a little bit and allow you to feel confident more with knowing where the big buyers and big sellers are. So I have this all in PowerPoint, folks. Let's just hop right to this PowerPoint here to boot. There we go. So mastering buy and sell order flow to anticipate major market movement. Now, just before we go any further, small risk disclaimer, results can and will vary from student to student. No guarantees, promises, or warranties have been made that suggest any trading will profit or not result in a loss, so on and so forth. But at the end of this webinar, folks, personally, myself and Fausto, he'll be back on Monday of next week, but we would like to invite you to join us inside our live trading room for a 1-week trial. If you're fancy with your phone, you could actually just scan that QR code from your camera on your phone, give you access to our live trading room. But you know, hey, that's for the end of this presentation. There's a lot to sift through here because truth be told, you might know Fausto. You're certainly familiar with Cyber Trading University, but who's Josh Levitan? Who am I? Because, you know, why should you listen to me, right? Well, I've been doing this for about 9 years. And hey, before we go any further, there's a lot of us here that have been doing this for 20, 30, 40, 50 years. 9 years. Well, I'm talking 9 years, every singular day of the week with minimal days off, doing the same exact thing every single day. So it's basically like saying, hey, if you were to go out there and golf, go out there on the golf course, 18 holes every single day, you don't think that someone for 8, 9 years, let alone 5 years, could successfully train you? Come on. Now, it's not a matter of how long you've been doing it. It's a matter of how consistent you are with your strategy, your ability to block out emotion and just do as you're, just seeing the strategy that you're following play out. There's a lot of reasons that you could lose money, and a lot of them are tied into emotion. Maybe setting your stop and then pulling your stop, hoping that the stock is going to look to push up, and then it tanks. Getting greedy and trying to trade way more shares than you really should be doing. Same to be said with the type of stock that you're following, because at Cyber Trading University, myself and Fausto, we look to train our students not to trade the shiny object in the room at first, not to trade the craziest stock out there. Those are very high risk. So unless if you're doing it on much smaller share size, you're not really going to be making that much money anyway. So we want you to be able to maximize your opportunity to make great income. But the way to do that, though, is to do it with consistency, to follow a strategy. And once you see success with it, then you should have the confidence to say, okay, let's trade more shares, or okay, let's trade a more volatile stock similar to this, right? You gotta walk before you could run, essentially, right? So that's how Fausto trained me back from October of 2014. From there, really, it's just a matter of just coaching our students in our live trading room each and every day of the week. So outside of this webinar I'm conducting here, my day has been and will be continuing with one-on-one coaching sessions with all of our students throughout the day. I host our live trading room each and every morning and afternoon at 2:30. So if you join us later on today, you'll have a chance to follow us in the live market scan with myself and build up a new watch list taking us going into the afternoon. All right. But let me ask you here. I mean, you know a little bit about myself now at this point. There's a lot more to it, but I'm not here to bore you about myself. Why are you here? Why are you joining this webinar right now? And before you can answer, I know the two reasons why pretty much everyone is here. As I take a water break in between. Well, here's the brutal truth, right? I'm not to be blunt, but here's the reality of the situation. You are here in a webinar to learn about trading because A, you are either consistently losing money and you need to stop the bleeding. Now, let's say you're not one of those traders and you're saying, hey, I got my head on my shoulders here. I know what I'm doing. I've been making money this whole year. That's great. That's fine. But perhaps you're not satisfied with the money you're making. Perhaps you're looking to learn that next strategy to take it to the next level. Am I wrong? Tell me where the lies are, right? There's no other reason I feel that why traders are here right now. You're either here because you're losing money and you gotta stop, or you're looking to find the next tool and take your trading to that next level. You might be doing pretty well, but how can we get to that next stage? So here is where we're going to look to dissect volume, because with indicators and with other strategies, I'm not here to dismiss them. I'm not here to insult anyone that uses indicators or other strategies, whether it's just based on fundamentals and you need to do a lot of research and digging on the stock before you trade it or what. But it's a matter of following the big buy orders out there, because those are the orders that dictate where a stock is most likely to go towards over time. So whether you're losing money or whether you're at least making money, but you're not really seeing the next step, it's a matter of turning you from this to that. Little comedic, but of course, that's where we want you to be right here. So over time, what we're going to be covering coming up, how to find the best stocks to trade, navigating the challenging world of high frequency trading, HFTs, and algorithmic trading. So we'll look to focus on that with level 4 ultimately, dissecting level 3 and level 4 quotes, trade entries and exits. We'll go over a few trades here alike, and then from there, market maker tricks and traps. So perhaps outside of today, as the markets pulled back just earlier, the NASDAQ, at least heading into this morning, was up over 46% at this point across the calendar year. And then with that, hey, we saw the markets pull back today, perhaps a prelude for what's to come. We have the Fed meeting coming up next week. Market calendars on going into Wednesday, the Fed meeting will conclude. And then, of course, like we said, we're in the middle of earnings season. Tesla just reported yesterday. There's a bunch of different companies out there across the remainder of this week, but even further next week, you have AMD next week for certain, a bunch of other mega cap stocks. So how do you trade them? How do you trade them? How do you look to trade stocks like Tesla and AMD? How do you trade stocks like Upstart, which over this past week had continued its short squeeze, moved up over 18% across the day? Obviously, I'm certain that most, if not all of us, have seen Carvana's move over the last month. But up until this morning, Carvana was moving up from 35 to 42. And then another pop-up higher just yesterday morning up as high as $58. So how could you take part in these opportunities? How about RXRX before this morning? Ended up squeezing up from 7 to 19 bucks, and then on a separate run the following day from 11 or 12 bucks up to 14. Even if you can get 30% of that trade, if you can just get a small amount of meat off the bone there, I find that to be a huge profit for my students and I inside our live trading room. Even this Nikola stock, I mean, listen, we're not really interested in trading the penny stocks or stocks below $1. If there's something that's cheap and it's moving well, it's going to be hard to ignore it. So I know a lot of us do tend to follow the larger cap trades, or even if you do tend to follow a less expensive, you might not be interested in a $1 or $2 stock, but this was one of the best trades that we had across this past week. Nikola thing went from 140 up to near 2, and then it built support, allowing time for a lot more traders to jump in for a second leg up. All right, well, we talked about Tesla before, but we were talking about Tesla in relation to the bounce. And, hey, where can we find an opportunity on the way up? Do you short stocks? The answer to that is, of course, yes. And Tesla could have been a phenomenal short off its earnings today as it broke that 275 support. Disney, from this past week, we ended up seeing them just get crushed over time. I think potential buyout candidate, if I'm not mistaken. Perhaps same to be said with AT&T, right? AT&T over the last week or two has been getting clobbered, but just over the last 2 days, from basically 15 down to 14.30, then on a separate day, just the next day, I think even from 14.20-ish down lower. So if you can get 30% of this trade on 1,000 shares, that's a huge profit to rake in across just maybe 20, 30 minutes on the morning. So that's what myself, that's what Fausto, and that's what our students look to do all throughout the day. Now, when it comes down to following buyers and sellers out there, it comes down to really 3 key rules. So we need to learn how to scan the market first before anything. We need to know where the best levels are to enter and to exit. So that really would be reading level 3 and level 4. That's what you're essentially using these tools for, to learn where to enter. And then from there, once the stock is trending in your direction, you know that you're at least a little out of the doghouse and you could set your stop, break even. Well, where's a target? Where could you look to get out, should the stock continue to move up in your favor? And then, like we had said before, just with setting stops, just ultimately having your game plan set in case if you are wrong. So one thing that I personally say to our students inside our live trading room, it's one of my famous catchphrases. We have a bunch of our students joining us here in this webinar right now. I think I see Bill, I think I see Grant specifically. They're probably going to crack up when I say this. One of my famous catchphrases is that once a stock breaks through a big level, we should be expecting a big move shortly after. So you have to hold yourself to that. If the stock is not holding above your big level, you know, you hope to see it make a strong reaction up. So if it's like chugging along, not really like your cup of tea, not really ideal, but if it's holding your level, that's good. If it breaks right back under the big level that you just took the time to enter from, something's up. So that's where I tell you that if it makes a big move and you jump in, and if it goes the other way, you have to get out because it's going to make a big move just the complete opposite direction. We'll show that live as we wrap up here, just in terms of like, you know, a false breakout. It's not a matter of your winners, but it's more so a matter of getting out and containing the losers. All right, so scanning the market. So of course we all know Tesla, I mean TSLA of course, but actually to jump back to the live market for a moment, you know, we did well on RXRX up until this morning where it just kind of consolidated a little bit and then, much like the market essentially, but this had a big drop. So at least from yesterday, how were we able to find RXRX? You know, what allowed us to find this stock? And then even from before that, looking at the daily chart, you could just see this thing had a big pop back from mid-July. So how are we able to capitalize on these trades as they're popping or right before they're making their big move, not after the fact, right? So that's where it comes down to the percent gainers and losers lists. You could find that right from your platform, whether you're on Thinkorswim, TradeStation, IB, you name it. Any direct access broker should have a gainers and losers list where you could scan across the morning. Now, the key though is to make sure that you're doing this before the market opens up. You got to do this in pre-market. I typically say start at least 1 hour before the market opens up. And then ultimately, really, not to just, you know, promote our trading room here, but this is the flat out truth, folks. The more eyes out there in order for us to like scan, then the easier of a time it will be for you to jump in on a trade. Because if you're following one stock and then all of a sudden I see a separate trade and it's making a huge push, well, if I call it out and you see that there and you have time to jump in, I'm sure you're going to be pretty happy at the end, right? Emotions weigh heavy. So imagine on the flip side, you not seeing that stock make a pop and you're watching another trade, you know, it's like watching the grass grow. And then you come back 20 minutes later and that stock's already done. It's already off to the moon. I felt that way. I mean, hell, I feel that way every day because no matter what, you're not going to be able to be on the ball on every trade on every day. So that's happened to me this week. That's happened to me, I think, even this morning in the pre-market. But that's where, though, otherwise, you don't want to jump in and chase. You don't want to jump in just recklessly. So scanning the market's one thing. You know, finding these stocks is one thing, but it's a matter of knowing how to trade them. So inside our live trading room, we have our morning meeting at 9 a.m. Eastern time. We stream that on our social media channels on YouTube, Facebook Live on top. So at the end, certainly, I'd invite you folks to subscribe to our social media streams. But you know, Fausto typically does the morning meeting, and I'll do the afternoon meeting there afterwards. But here are the call outs. I mean, even just from 9:44 in the morning, my colleague Rich calling out AT&T, a big iceberg order on the ask at 14 bucks. That was at 9:44. Check the timestamp. And then from here, well, what happened? Of course, AT&T moved up, but what was the aftermath? Well, it hit 14, or it just went right under it, and then it got smacked right back down. So if you're in our live trading room and you see that call out, it's not a matter of just jumping in, but it's a matter of saying once the stock is moving up in your favor, where do you get out? Well, right under the iceberg, right under it, not even at that price. So you look to sell a few pennies, a few cents under it, you come off looking like a wizard, right? Been on coaching calls since 8 a.m. Eastern time this morning, folks. I had to make sure my water bottle was filled up before this webinar started here. So AI, next example really quickly. This was myself just from the other day. At 1:36 Eastern in the afternoon, this was more like a sudden call out because I saw it drop. I'm looking for support. I was like, oh, that's right. Okay, I remember from earlier, we had big support in between $40.90 and $41. So you know, it broke into those levels. And then what was the move afterwards? It sure made a big move afterwards, but then it continued up that much higher, up towards 42 or so. So even at 138, I was saying, you know, nice slingshot so far, nice bounce. Want more. Thankfully, easy to say, but that's what we ended up getting here on this trade. I think this was just from yesterday on the AI. Well, one thing before we go into volume really quickly, folks, it's to make sure that you're following times of the day. So right from that point, You know, typically at 9:30 in the morning, market opens up, but you don't want to just jump into a trade at first. You know, typically first 3 to 5 minutes, there's a lot of craziness happening out there. So really, we wait the first 3 to 5, and then we jump in. Myself, Fausto, and our students inside our live trading room. You know, really the morning is up until 10:30, maybe 11 o'clock on a good day. So, you know, where you see the yellow, it's where you want to provide a lot of caution with your trading. Really, this is a very inactive time, 11 to 2:30. Small backstory about myself, because I don't want to go off on a tangent and lose track of my time, Anna. So it's to say, for any of our members here joining us, you may be unfamiliar with myself. Well, before I joined Cyber Trading University and before I was trained by Fausto firsthand, I was working in real estate, and I was doing you know, high-rise residential rentals. Coincidentally enough, on Wall Street, 63, 67 Wall Street, look them up, they're high-rise residentials. I was working those buildings every day. Well, the reason I bring this up is, well, without any experience within the stock market at that time, back in like 2012, 2013, I would always see all these suits out there, all these, you know, guys in suits out there at like 11 in the morning, 11:30, and the streets are packed on Wall Street, like the food trucks in particular. Talking all of the halal stands, all of the taco trucks, they're lined out the door or lined out the street with all these suits out there, whether they're bankers or analysts or anyone out there on Wall Street itself. Well, truth be told, that's when lunchtime begins. So you're seeing the market volume begin to wane off and drop off. And, you know, of course, there's other things happening, other meetings happening, perhaps assistants taking control. But lunchtime, think about it. It's as simple as it gets. From 11 to 2:30, there's really not as much momentum within the market. You might get a crazy pop or two out there on a stock, but you got to sit on your hands more often than not at that time. Then from there, you know, typically going into the market close, like 3:30 even more so, is our premier time in the afternoon to try and wrap up going into the end of the day. Now, one of our cardinal rules, myself and Fausto, swing trades are swing trades. That's different. When it comes to day trading, you never want to recklessly turn a day trade into a swing trade. I mean, hey, this could be easy to say, perhaps given how much RXRX already moved up, but given how much it popped yesterday and ran, that was not a swing trade recommendation. That was a day trade call out inside our live trading room. So you never want to get stuck holding these stocks overnight. There was a stock yesterday with Carvana that moved pretty well. I mean, the last month or so moved with Carvana. This stock, VRM, it's a cheap stock. So, you know, if you're not as familiar with it, understandable. But look at the move it made on the daily chart. So for as much as Carvana dumped off today, what do you think this is going to do? Well, if you jumped into this trade going into the afternoon and you're holding overnight and you can't get out, what happens when you wake up at 6:30 in the morning and you see Carvana down like 3-4%, or you see a tank going into the market open? You don't want to be stuck in that position, held liable to hold this day trade overnight. There's a fine difference between a day trade and a swing trade. We promote and advocate swing trading, of course, inside our live trading room, but the difference between the day trade and the swing trade should be determined well before you press the buy button. Think about it. So you never want to just randomly just switch your game plan up. Now, at least to get back to the PowerPoint here again, I know I'm on slightly limited time. So with that, finding these stocks will only get us so far. It's not a matter of just calling the stock out. Like we said, just with the scanning part of it, it's a matter of calling out where the levels are, where the iceberg orders are, knowing how they move essentially. So that's where level 3 and level 4 really come in handy. Level 3 here is what we nickname it, the NASDAQ Book Viewer. I'll give you folks a link here coming up just in a few minutes, just showing you where you can get this tool. Now, really quick, before I go further, anyone here, any of our attendees here use the broker Thinkorswim, or the platform Thinkorswim? Because if you do, you could actually get firsthand access to level 4 directly through the Thinkorswim platform. You'd have to just request it directly from them, from their support tab on their platform. You'd have to ask for a Bookmap, and we'll talk about that just coming up here in a second. So level 3 and level 4 give us the absolute best chance for us to locate where these stronger levels are. So NASDAQ Book Viewer, aka level 3 right here, you can see the buy orders create support. So this is about 25,000 shares on the bid. This was back from like a week ago on Carvana, where, hey, for as much as this dropped and dropped and dropped, where could you find support? It's a smaller picture here, so we blew this up here on a smaller screen. So just look at the size discrepancy. 200, 271, 412, 79. These are all shares, not contracts, mind you. If these are 200 contracts, I'd be like, oh, okay, that's actually like big share size, right? But even if these were contracts, if this was 200 contracts and whatever, then how freaking big is this? 25,000 plus shares. Give me a quick second here. Use that little thing there. So 25,600 shares on the bid, made up by 5 total orders out there at the price 31.32. It crashed right into it, and then from there, it ended up providing for a really strong slingshot, a bounce back up for about 3 points. You have your resistance here on Pinterest, social media app, if you're not as familiar with the company. So, think of it like Snapchat or Meta, like one of these social media platforms. Well, Pinterest here ended up making a strong run going into the early afternoon. You had an iceberg order out there on the ask, so a sell order. So someone that has shares that's looking to sell them. In fact, it's not just one, it's about 3. So maybe there's one big person in there that's making this up, but in total, it's about 27,000+ shares on the bid. I'm sorry, on the ask, pardon me. And with that, well, it moved up towards that price, 30.55 on the ask. And then from there, the end reaction, it dropped, right? So easy to say, looking at these PowerPoints, but these larger orders create support, they create resistance. And with that, let's go over a couple more examples, at least that we caught from this past week. So Billy, B-I-L-I, it's a Chinese company, and just China market's very volatile. So there's a bunch of different Chinese tickers out there, XPEV, NEO, IQ, Billy. These are all stocks that we trade inside our room. Well, again, very similar example just for support. You can't catch a falling knife. So just looking at this chart, it's not as easy to say, oh, it's just going to bounce from here or here. You need to know where the buy orders are out there. So for Billy, what's interesting here is that we ended up first seeing support at 15 bucks. So initially, we saw about 34,000 shares on the bid. It was actually made up by over 100 different buy orders out there. So you know that support at first. Typically at these whole number prices, right, you could find big support, $14, $15, ahead, maybe $16. But here's the interesting part about this trade, right? Because actually, when Fausto does these webinars, we try and make these examples really just as cut and dry as could be. There's a little twist, little flavor to this one. Notice this order is out there at 15. Now, we ended up seeing over time a large chunk of that order, about 20,000 shares of that order at 15 bucks, they actually pulled their order at 15 and they moved it higher. They moved it up to this price here, $15.23. So now, not only do we have a support at 15, which we assume to be one, but this is the new support at 15.23. Just someone moved their order up higher on the bid. Now, why do you think they did that? Why do you think that they would do that? You don't want to think it's manipulation and think they're trying to get one over on you. Think of it innocently. Perhaps someone really is trying to support that stock and are looking for a bounce much sooner than later. So with saying that, let's just see the end result. You could see at first it moved up towards there. This is the exact moment when this order appeared at 15.23, right where this green arrow is. So that's when the order appeared at 15.23. And then afterwards, right on up. So it goes to show that that large order on the bid catapulted this stock back up pretty nicely. Now, this next one on AI is going to be a good example of resistance. So for as much as AI ran up here on the intraday chart, on your 1-minute chart, well, where could we find a top? If you're long on this trade from 40 bucks here or off a breakout here as it popped higher, well, hey, over time, where's our next top? Is there a larger resistance even ahead than what we just had? So on this trade with AI, I blew it up here a little bit here. So you could see at $42, there's about 56,000 shares. Definitely looking at the number of orders that make this up, it's a big discrepancy. 44 total orders out there compared to everything else. Obviously, it's very tiny in relation. So, with that, AI tested 42. It nipped it right there. It made a lower high here, and it tanked, right? So just a very clean example of how this rounded top was made. You want to know how this chart was made. It was made because of this order. This order prevented this stock from pushing any higher. From there, you lost bullish momentum just on the intraday chart. And if it's not going to break any higher, there's only one other way the stock's going to go, right? It's a funny way of putting it. This is the way I like to kind of jokingly put it. The chart goes from left to right. The stock goes up and down. That's it. There's no in-betweens. It's not like the stock does a triple axle backflip there. You read the chart from left to right. The stock goes up and down. If it's not going to break higher, there is only one other way the stock is going to go, right? So, don't let emotion seep into your head thinking, oh, it's going to go, it's got to pop higher. It should pop higher. Please pop higher. And then it's just tanking. So don't get caught slipping there. Now, don't email me at FaustoP@CTU Corp, but email Fausto himself there at FaustoP@CTUcorp.com. If you're looking to get more information on the NASDAQ book viewer, you could actually just email him there. I thought we had a QR code there as well, but perhaps at the very end of this presentation we will. So here we are now. We're moving up from level 1 to level 2. We moved up from level 2 to level 3. Now we're on the penthouse floor. We're on level 4 right now, folks. So this is where we're going to get to show the heat map once again, level 4. So this is essentially where the orders are showing based off of this colorized heat map here. So of course you could see this from level 3, but what this does even better is that this actually tracks the orders out there across the heat map. So you don't lose sight of it. You don't forget it. For any of my engineers out there listening to me right now, if you find yourself to be more visual with your trading, more visual just with blueprints and planning, this is for you. So it allows you the chance to retain this information where, oh, that's right, that iceberg at 14 bucks was out there all damn morning, right? So there's a bunch of different examples that we'll go over, including this falling knife on Mara. This was a great one where Mara, Bitcoin type of stock, it's a Bitcoin miner. So, on this day, it was dropping. It broke under a little support here at 1550. Looked like there was some support there. But we ended up seeing a pretty large order, totaling nearly 72,000 shares out there on the bid at 1530. So just like that last example, what happens? Well, it ended up providing that slingshot. It provided that boost it needed, and then over time, it ended up pushing back up to the highs. Just another example of support on NIO, Chinese EV company again, we were just mentioning. So NIO had support at 1050, about 97,000 shares that were out there. So however many buyers that made that up, I don't really care. Because when you look at the size difference, 9,236, 97,000, what do you think? So $10.50 is at least the next clear, definitive support level. Over time on this trade, well, it crashed into it. It crashed back above it. And then from there, not only did it run, but new support even built on this trade. New support built on this. A new little iceberg order showed up. This was for 74,000. At first, there was 97,000 here initially. And then after it broke into it and moved upward off of it, well, we had another iceberg popping up for a relatively similar size. Let me actually really quickly jump. I know I'm on limited time, about 10 minutes to go, folks. So let me actually jump back to the live market here. And with that, go over a couple of different trades because there was a stock earlier, AI. We just brought it up on the PowerPoint. Well, what does it look like on level 4 right now? Well, look at Tesla to begin. There we go. Well, AI from this morning. Here's a little interesting part about AI. This ended up moving up towards an iceberg at $41. It broke into it, it pulled back, and then a new iceberg order showed up, very similar to the last example we just went over. This one here just on the ask for about 30,000+ shares. Well, that's not the only resistance that was out there. You had equally sized, if not larger orders out there at 41.50, at 42. Well, looking at how large and thick these orange lines are, you could tell they're pretty big sell orders out there. So with all of this resistance, not just the one at 41, but the one at 41.50, the one at 42 on top, what do you think is going to happen? Right? Big drop, and from there it pulled back. Now at this point, it's finally beginning to move back up to like the VWAP price, if you're familiar with that at least. But just otherwise, that was a good example of just seeing how resistance was holding. And then once more on Tesla, as we talked about, Tesla ended up making a nice little bounce so far. Question is, though, are we going to see the markets really slingshot back up to where this can make a stronger push just before the end of this day? So, just because support held once or twice here doesn't necessarily mean it's going to continue up perfectly. If we don't continue to see strong bullish movement across like the next hour or two, just like we spoke about before, if it's not going to break higher, if it's not going to move upward, going right back down. So the more it tests support, it's going to eventually crack support and crash through it. So perhaps if it's not going to bounce off of it here soon enough, it might be later today. It might be tomorrow if the markets break lower into the close tomorrow, end of the week. A lot of options expirations out there too. So for right now, it held. Not every stock is going to make that big bounce you're looking for, though. So on a trade like this, if I were to jump in from support, it's a matter of just making sure, of course, it goes higher, but line in the sand is the lows. If it just re-breaks that 270, odds would tell me that that's going to crash really badly. So, all right, folks, we're about to finish up right now. I appreciate your participation thus far. If you are looking to learn more than anything, folks, it's not just a matter of, pardon me here. Pardon me right there. Let's just go right back to this. There we go. It's not just a matter of scanning. It's not just a matter of attending this webinar and saying, I know how to use this now. I got it. This is it. He presented this pretty clearly. I got it. I'm going to just get level 3 and just start, trading off of it. You have to learn before you could earn. You have to walk before you could run. You have to ride the tricycle before you could ride the bicycle, right? I mentioned it to my students this way in our live trading room. Before you learn how to hit the 100-mile-per-hour fastball in the MLB, for any of my baseball fans out here, Yankees are in last place. That's not fun. But for any my baseball fans out there, before you learn how to hit the 100-mile-per-hour fastball, you have to learn how to hit the 70-mile-per-hour fastball. Before you learn how to hit the 70-mile, you got to learn how to hit the 50. Before the 50, you got to go to T-ball, right? Or you got to use that little T stand, right? So with that, you have to learn before you could earn. It's a matter of screen time. It's a matter of being with a trained group of professionals that allow you the chance to learn and gain insight from them. So with that, of course, Fausto's been doing this for 30 plus years. He's one of the premier educators in this business. And with that, one of the original educators out there from the So's Bandit days. So Cyber Trading University has been featured by more brokerage firms than any other school or education company out there. Bookmap is not a brokerage firm as much, but they are a highly intuitive platform that I wanted to slip on here on top. But with that said, though, we are rated 4.9 stars on Google. And with that, though, hey, you're not really seeing that elsewhere from other companies. We have some great presenters on top of myself here lined up, so stay tuned. I am staying tuned myself. So you have, Will Busby, I believe, coming up, and a couple of other great presenters ahead. But with that, though, Cyber Trading University, when it comes to CTU, we've been around longer than most, if not all. So with that, everyone here, all of our attendees are invited inside our live trading room for a week-long trial. We have live audio commentary all throughout the day, beginning at 9 a.m. Eastern, and really just all throughout the day up until 10:30. We have from 2:30 to 4 p.m. live audio from that point too. I host a live weekly workshop on or inside our live trading room called Traders Talk. So that is a much more intuitive, advanced type of workshop where it gives our traders the best chance of really going back on stocks from the week, from the day, and answering the question of why. Why did this stock make the move that it made? How? How could I get my hands in on that trade? The more that we go through this, well, it becomes a lot easier for us to react, right? So, we provide weekly education inside our live trading room. And with that, if you were looking to join us, whether it be for tomorrow, whether it be for later today, or even for next week when Fausto's back, scan the QR code if you're fancy with your phone right there, and it'll take you right to the sign-up page to join us for a week-long trial inside our live trading room. If not, though, you can go right to this link right here, www.ctu.co/trial, and then from there, it'll take you to the same page essentially. All right. With that, though, essentially what you're getting with the live trading room is not just the audio, you're getting the watch lists too. You're getting the live trade meetings with Fausto, myself, my colleague Rich as well. You're getting our Traders Talk workshop. You're also getting 3 pre-recorded workshops on top, entries and exits, time and sales, and level 3. We're going to be updating one coming up here pretty soon in the next 2 months with level 4 on top. But with that said, you're going to get also our entire Traders Talk archived video library. keep in mind that weekly workshop, Traders Talk, we do it once a week. I do it every single Tuesday. So when you sign up with us, you're getting every pre-recorded version of Traders Talk that we've done across this whole calendar year and last. So if you think that that's not going to be useful for your trading, I barely remember what I had for breakfast this morning. So to go back on these trades from last week, from last month, from 2 months ago, it's a complete refresher. It's like, yeah, I know the stock made a pop, but how did this make the exact move that it made? That's what we're trying to study. So all of these workshops, including the Traders Talk archived video library, is some of the most useful education that you can get throughout this entire industry. And then on top of that, really quick, just last little dinger here, but first 20 members that end up calling or getting this trial membership, you can call our office to do it, but you can scan the QR code from your phone or just go right to the link here on the bottom. But first 20 signups get a free coaching call with the man himself, with Fausto, 35+ year professional within the market. He's been teaching for 30 years at this point. So first 20 members that sign up will get a free coaching call with Fausto in the live market. So, it doesn't get really any better than that. All right, folks. On top of that, I didn't remember this part, but even better, you could scan this QR code and get Fausto's guide to following the big money. It's just a free ebook that you can get on top included. All right, folks. So with that, hey, I appreciate everybody joining me here this morning, and I appreciate you allowing me the chance to tag in for Fausto today. I hope everybody enjoyed. I look forward to seeing all of us inside our live trading room coming up very soon from now. Take care.
All right, welcome, ladies and gentlemen. We're going to talk about how we can automatically trade these complex option strategies and spreads. And what I might do here, and I might regret this, but maybe I will turn on my webcam for at least the introduction. Just a second here. There you have it, folks. So I am live, I'm real, and just thought I'd put that up and let you know we're doing this live. So I'll put that down in just a bit so we can have more room on the screen, but we're looking at pre-built automated strategies for any market condition, one-touch responsive trade alerts. This is really unique. You're going to love taking a look at these. And this really means you don't have to sit in front of the screen and babysit your trades all day long. And we use automated risk and profit management if that's something you'd like to activate as well. So remember, we are speculating. We're trying to make money as markets move up, down, and sideways, and there's always risk involved, just like in trading places there, the Duke brothers explaining to Valentine the movement, I guess, of commodity prices. But do take a look at that risk disclosure. It is important. Remember that when trading, you should be using risk capital, and that past performance is no guarantee of future results. A little bit about Altivest. We are a registered introducing brokerage firm since 1997. So we've been doing this a long time, folks, getting close to almost 30 years. We've traded tens and tens of millions of contracts over the years. That's yours truly down there on the S&P 500 options trading floor. Some of our staff that were filling all of our options orders for us over the years. Of course, it doesn't look like that any longer. We, of course, are highly regulated, being in the futures and options industry. We're always audited with all the regulators and so forth, so that's to your advantage. We're members of the NFA, registered with the CFTC, the Commodity Futures Trading Commission, and we're located in California. And you may have seen us in some of these other presentations over the last few years in particular. So if you've seen us, glad to have you back with us again. And if not, I hope you'll enjoy what we're going to do here in just a second. We're going to show you this live demonstration. And a little bit about myself. I've been doing this 32 years now. I'm Erik Gebhard, co-founded Altivest, and back in 1991 is when I began with my Series 3 license, and I graduated from the University of Southern California with my BS in Business Administration. I started in securities trading and working in the mutual fund industry, as well as variable annuities and so forth. So I had my Series 6 and 63 licenses. And I currently have my Series 6 and my Series 65. That's the investment advisor law license. So with that said, let me go ahead and stop that webcam at the moment. and the introductions are out of the way. And this gives you a little more room on the screen. And just a second here, folks. I'm not sure why the screen is freezing up here. There we go. So what are the top 3 barriers for traders? Let's take a look and see if you can identify with these. How about a lot of noise, opinions, storytelling? This is back just a few months ago. Jim Cramer says, could be a win for Home Depot. And then a week later, worst revenue miss in 20 years. So a lot of conflicting information. This one here, he said here, Elizabeth Holmes could be the next Steve Jobs. And of course, she's in prison now. And then Sam Bankman-Fried could be the next JP Morgan, and he should be in prison. So anyway, a lot of opinions, folks. They don't amount to much more than storytelling. So we're going to try to avoid all that, as well as all the worthless, I think, price predictions. This one kind of cracked me up. So Bitcoin is either going to 250,000 this year or 5,000. So I'm not sure how helpful that is. And how about this one? With time and discipline needed to screen watch. Not many people, not many of us have time to sit in front of the screens all day. This person here, I just thought it was interesting. This person trades full time in front of the computer from the market open until the close, watching, and every once in a while after market hours as well. Reminding me here, all we have to decide is what to do with the time that is given to us. So kind of some words of wisdom there from a fictional character. And let's take a look at the next barrier here, folks. How about just us, our own emotions? We need to learn how to master fear and greed, stay off this roller coaster and this cycle of emotion where things are going well, your euphoria sets in, then you get despondent when they aren't doing well. We want to stay off of that roller coaster, try to control our emotions. And this is a great book. It says markets can be expensive, trying to convince, it can be very expensive trying to convince the markets that you are right. That's out of Market Wizards from Ed Sequoia. So there are 3 common biases when making investment decisions, and we're not going to jump into all the details, but I think you kind of get the idea. Recency, confirmation, and anchoring bias is what they're referring to. And this one meme here sort of sums it up. You know, when everything's going straight to the moon, sometimes we tend to think we're a genius. So we want to avoid those pitfalls and that hubris. Okay, and let's keep on moving here. I'm not sure why I've got this glitch here, folks, but just bear with me. For some reason, my slides are not advancing, but just give it a second, if you don't mind. Here we go. So can your emotions compete with algorithms? Probably not. 90% of the US stock market is dominated by algo trading. So when you're trading, you're not necessarily competing against the person behind the screen. It's really a machine. So how can we use algos with trading options? Yes, we can. And we're going to take a look at that. We're going to use these multi-leg spreads and maybe look at how to collect premium. This woman here on CNBC talked about option spreads are buying and selling different contracts, a common way for investors to hedge risk and volatility. And it's usually a cheaper way to trade because you can offset your cost by the proceeds from different contracts. And so she's absolutely correct about that. It's been used by Wall Street professionals for decades. So before we jump into our demo, just a little brief background on how we look at this and how it works with premium collection, how an insurance company might trade options if they're trading options. They of course you know what they do now. They get paid premiums to assume risk. They always insure themselves. They're consistent and patient, and they look at probabilities, simply math, statistics, actuarials, that type of thing, quantitative analysis. So we're going to look at something similar when we collect option premium. We're looking for base hits, not trying to hit home runs. We need to be consistent and patient as well and manage our risk and profits as well. Don't get greedy. You need experienced people to work with and the correct tools. So we'll look at some of these strategies for any direction, whether it's non-directional, bullish, or bearish. Look at, of course, every outcome will have a target with an associated fixed amount of risk. These are called credit spreads, predetermined risk and reward, like we mentioned. And we're going to do this on the stock futures index options, not looking at individual stock options. Of course, the benefit there is an index is always going to be less volatile than an individual stock. And of course, you can apply strategies for any direction quite easily with an index. You can hedge an entire portfolio with an index, or of course, speculate directionally. And we're looking at just one or two markets rather than trying to filter through 6,000 or 7,000 different securities. So we like to simplify things. And before we jump in, we'll look at the two terms that are often associated with options. There's more, but we're only going to look at these two Greeks. One is delta. So how much does the option value change with the change in the underlying asset price? It's also the approximate probability of expiring in the money. So if the delta is 0.25, that means there's a 25% chance it expires in the money, but conversely, a 75% chance that it's worthless at expiration. And delta, of course, is always moving with price and time, and it is not the probability of a winning trade. So remember that as well. And then there's theta, which is time decay. So remember, options always have limited lifespan. And this is what theta represents. It's usually, it's always a negative number. So if theta is negative 0.05, then that option premium is at 10 points. After one day, that option premium would drop to 9.95, and so on and so forth, all other things remaining equal, just to illustrate theta decay on a graph. As you approach time zero, the percent of the premium remaining, drops and drops and drops, and of course, it will expire at some point. Here's a quick example of selling an out-of-the-money call spread. Here's the current market price in this illustration. You sell this out-of-the-money call. In this case, you collect 4.5 points, and you simultaneously buy that blue line, which is a further out-of-the-money call, but you pay 2.25. So the net result is you collect 2.25 points, or $112.50 minus your commission. And that's how you collect premium, by selling an out-of-the-money call spread. And the same thing with the put, just looking at the put side here. I won't jump into that one, but you get the idea. And remember, we're not trading naked options, so no naked creatures allowed. Everything is insured in advance. Maximum risk is capped. These are covered option spreads. And the couple big benefits, first of all, there's no unlimited risk. And second of all, there's no margin calls when you're trading covered spreads if you do it right. And that's the way we like to do it. So you don't want to end up like this poor guy when this woman says, "Who is margin and why does she keep calling you?" So we want to avoid those margin calls, ladies and gentlemen. Here's an example of an iron condor spread. It's just a combination of the put and the call spread that we just saw. So you're selling out of the money call spread and put spread, and you collect premium on both sides, and you look for the market to stay in between this wide range. Here's another variation. This is our unique strategy we created a decade or so ago. It's called a dragonfly. It has 6 different legs, or 6 different option strike prices that you're going to trade. And here's what it looks like. You sell 4 of these out of the money calls here. You buy 3 further out of the money and 1 closer to the money. And then you have the same structure down here where you sell 4, you buy 3, and then you buy 1 more closer to the money. And we'll jump into the detail on this in the demo here. But you'll notice the one that you buy here compared to the 4 you sell, is 50 points closer to the money, and the same thing with the puts here. So that changes the dynamic of this trade quite a bit. There are bullish and bearish strategies as well, and we're going to jump into that in the demo. But here's the question: how do you know which markets to trade, what strategy to apply, at what price, in terms of the timing of the entry, and how do you manage the exit in terms of risk and profits? And that's called Theta Trader. This is our own software solution, algo-driven software, where it will pre-build option spreads for you. We call these Theta trades. These are professional strategies for bull, bear, and say just non-moving markets, if there is such a thing. But oftentimes markets in terms of a stock index can be in a range for quite a period of time. So we're going to look at these automated risk and profit tracking methods, something we call the RTI, or the risk thermal indicator. So we're going to jump into that demo right now. Let me switch the screen for us. Okay, you're looking at my dashboard now on Theta Trader. And it looks a little different for me because this is just a demo account. So it would look a little different for you up here, but generally speaking, you would have the same view. You have your Theta trades right here. You have any open, short, or sold positions here. Any open long or bought positions. And then you have all of your account info on the right side. And this is all integrated with your AltaVest trading account. So again, Theta Trader is our software that we built for our clients at AltaVest. So you would have an account with us at AltaVest. And then any current quotes here. You can see there are bullish strategies that are pre-populated, bearish, and we mentioned non-directional or neutral. And we're looking at 3 markets: the E-mini, S&P 500, NASDAQ 100, and Russell 2000. So those are the 3 indexes that we're going to be trading. And I'll show you why in just a second. But essentially, there are lots of benefits and advantages to trading on the E-mini markets, on those options in particular, because they're liquid, meaning there's a lot of volume, and it's much easier to get in and out of something that's a liquid instrument. Now, having said that, we looked at the Iron Condor and the Dragonfly. So here's an example. Today, there are these Theta trades available anywhere from 16 to 58 days of time. And you can see this gives you your potential profit at expiration. And this is called your targeted annual return at expiration. And you can notice these numbers here are much larger for a shorter dated option spread. This has 16 days of time compared to this one with 58 days of time. So really, these here are just to compare one trade to another in terms of the TAR. That's all. So we'll go ahead and look at the August end of month trade. Why don't we just pick one of these? And again, this is just a demo account, and I randomly pick trades. I usually pick trades that have a longer expiration date for the demo. So the algo is pulling up all the trade details here. Okay, first thing I like to do is look at a graph. So here's the current market price. Had this huge rally here, as we can see, and the algo says sell this out of the money call spread, collect premium, and sell this out of the money put spread and collect premium. And here are the details. It has 43 days till expiration. I won't jump into everything here, but you can see the net premium here being collected, your put risk, call risk, commission, cash required. So your cash required is $931 here. And you see the profit potential at expiration. So you have a targeted return on cash and then your targeted annualized return. And you can see the 4260 put is being sold and the 4850 call is being sold. If you wanted to change it, you could, but it does alter the dynamics of the whole position, of course, but you can modify the strikes if you'd like. And you can see here the delta on the 4260 put is 9.51. So that's telling us there's over essentially a 90.5% probability that this option would expire out of the money. So that's that sort of that higher probability math would suggest this option has a high likelihood of expiring out of the money. And then what about the call you're selling? 6.7% delta. So again, it's over, basically 93% probability that this call you're selling would expire out of the money. And since you're selling premium or collecting option premium, it always defaults to a sell. You're selling this condor. The default position is a 1. If we can go up to 2 or 3 or 4, whatever, you can see the requirements of the trade and margin changing. We'll leave it at a price of 180. We'll do 4 of these just for kicks. And that's it. You can see here that the trade just assumes it's filled because it is on a demo account. So let's go back and look at compare the condor to the dragonfly. Okay, we'll look at a dragonfly here, and we'll go ahead and pick this one here. It's thinking. It's working a little slower than usual for me. I don't know if it's a connectivity issue, but anyway, so here's the dragonfly structure here. Again, you're selling these 4 calls and you're buying 1, and you're selling 4 puts and you're buying 1 closer to the money, and then 1 further, 3 further out of the money, and then 3 further out of the money here. So that's the structure of the dragonfly, at least visually, but you can see it here on the graph. Basically the parameters. Again, all the same types of information, but of course it's different because it's a dragonfly. So cash required is $4,600, and that's because you're selling 4 calls and 4 puts, so it's going to be higher than just a condor with 1 call and 1 put. Profit potential 343.5, that's your maximum. I should also point out that we're always going to close out a position before expiration if you automate it. So I'll show you how to do that. Targeted return on cash, and then the targeted annualized return. These will always be a little bit less than a equivalent condor, and that's simply because you pay money to buy this additional call and put. So that's like paying money for additional insurance. So you pay a premium to restructure this trade, and I'll show you the benefits of this trade compared to a condor. But again, the put you're selling, the delta 9.79, so over a 90% probability it would expire out of the money. And then the calls you're selling here, about a 7% delta, so a 93% probability that these calls would expire out of the money. So that's why the algo says to sell them. We'll choose to do a quantity of 2. Leave the value here the way it is, and we'll just go ahead and place that. And you can see it just shows up as we're filled, just for the sake of the demo. Now there's a great feature here. There's a trade simulator, and I've loaded some trades here already to save time. I should have run these through earlier because I sort of forget what happens, but let's do it. We're going backwards in time. Let me explain this real quickly. This is a trade, a theta trade from February 2, and this would have been the March into month iron condor. And we're just going back in time to see how it would have played out. And you can see here, this RTI is green, and that means good, do nothing. Don't have to do anything. I can use these buttons to go 1 day at a time or backwards, or just use the play button. And then it turns blue, and that means take profits. So with 29 days till expiration, this trade matured enough, and you can set this up to automatically place an order for you when it turns blue and close out that trade and take your profit and move on to a different trade. So that was the March into month condor. And then here is the August into month condor. Let's run this through. and it turns yellow. So that means slightly elevated risk, but still do nothing. I think I was just going to show you this one in terms of how a trade may not work out. I don't remember exactly what happened here, but you can see it's yellow, elevated risk, and that makes sense. You're getting closer to the upper boundary in a relatively short period of time, and the trade's losing a little bit of money now. Then it gets even more elevated with risk. It turns orange. And then it finally turns red, and it says take your loss and move on. So again, if it turns blue, you can automatically close it out. If it turns red, you can automatically close it out as well. So you don't have to screen watch. That's the beauty of it. But I wanted to point out, a winning trade and a losing trade. I don't want you to think, oh, gee, I'm only going to show you winning trades historically. And here is another condor, and that took profits here on April 1st with 29 days till expiration. And now let's take a look at the dragonfly, compare it. And this is what I wanted to show you. I know I'm going fast, but let me back up. So this was the end of month April condor, and you can see the trade worked out well. It took a profit here on April 1st. So here's the end of month April dragonfly. It ended up having a profit signal on March 21st. So you're talking, 8, 9, 10 days earlier than the dragonfly. So I'm sorry, than the condor. So the dragonfly can often mature much more quickly than a condor, allowing you to get out of that trade earlier. So that can be a big benefit to a dragonfly. And we'll look at this one here, another condor. And starting to turn yellow, a little elevated risk, but do nothing. The trade is going red, but still do nothing. Then it turns orange and yellow. And then it finally ends up with a loss on March 9. So here is a dragonfly for that same trade, that same expiration on the same day. You'll notice too that sometimes a trade, even after being in it for a few days or a week or two, is still going to be losing money. And that's simply because theta decay hasn't worked enough yet. That's usually the reason why. And look at this. It actually gave a profit-taking signal. So compare that to the condor, where it ended up with too much risk and taking a loss. The dragonfly on the same day, had you placed a dragonfly for that March expiration, then it would have ended up being a profitable trade in terms of having an order placed for you to close out that position. So you can see the dragonfly can be more robust. And also, remember too, it's not just non-directional strategies. They're bearish positions, bullish positions. Here's something we call a bull hedge or a bear hedge. And it's really quite simple. It's just a combination of a call spread and a put spread. And in fact, it's probably better if I just show you. Here we go. What you did here on this bear hedge is you sold an out of the money call spread, and with the money you collected, you bought an out of the money put spread. I think I'll just go to the end and show you how that works. So you can see here, obviously the market dropped a lot. You collected the money here, kept it, and used it to buy an out of the money put spread, and that put spread worked very well, maximized its profitability here because the market closed below it. But at some point you could have been out much earlier for some good gains along the way. But that's how the bear hedge works, and you can simply do a bull hedge as well, just the opposite. And let me run through this here. Here's another condor. Kind of fun to look at these, and you have access to all this in Theta Trader. You can go backwards in time. So again, this one went negative here, had a small loss. And just wanted to show you that we don't always point out the winners. Now we do have proprietary research here called TradeScope in our daily trading summary. So we get this distributed to all of our clients. It's proprietary, so you have access to this every day to help guide your positioning and your decisions. We do this daily commentary as well, looking at what's going on in Europe and Asia and the US, and then looking ahead and looking at the economic calendar as well. There's a great help file up here, and especially under this glossary, people ask, well, how do all the signals work? You can read about all the color coding right here, all the spread definitions. I won't stop and read it all, but it's all there. Now, here's how to do the automation. So you go to My Settings, pull this up, and you simply click Activate the Risk Manager, and then activate the Profit Directive. And that's all you have to do, and then you save those settings. So it's just that simple in terms of automating the management of your position. So hopefully that makes a lot of sense. And that's a brief overview, but it really covers all you need to know. You can go see everything at a glance on your dashboard. The trades are already pre-built for you. And that's simply how it works. And I'm going to show you the best feature of all. So if you bear with me. How about trade alerts? These are 1 minute, one touch responsive alerts, and all you have to do is accept or reject those alerts with one touch on your smart device, because everything's integrated with your trading account. So here's what it looks like. You'll receive, well, let me go back. You'll receive a text message, and you simply touch the link, takes you to the alert. This demo's a little older, but it still works the same. You'll have a headline here. You'll see the graph of the trade. And you'll see the premium you're collecting, the amount of cash required. And look at this, it says sell 10 of these condors. So the quantity is already pre-selected for you based on what's in your account. So you don't have to do anything. You can decide if you like the alert or not. And if you like it, you just touch accept and the trade is placed. And then our technology handles the rest for you. So that is it for the alert. It's incredibly effective. People love using those alerts, and we're glad to provide those as well. So you can use the ThetaTrader platform and kind of create and craft your own trades. You can use the trade alerts and accept those when you'd like, or reject them. And again, I've got a little pause or delay here, folks. But give me just a second. I don't want to keep pressing the button here. I might really create a log jam. All right, so here's how to get involved with your ThetaTrader membership, is what we call it. You'll have access to everything you just saw on ThetaTrader. The Theta trades, the risk thermal indicator, the trade simulator, yearly value on that software over $3,500, and the trade alerts as well that you just saw. How really we have clients telling us all the time how convenient that is, and that's really the point of those trade alerts. Those valued at over $4,400. So everything valued at over $8,000 with ThetaTrader and the alerts. But you also have us. So we are experienced, we're licensed, we've been doing this for decades. So you have us to work with you as your private coach. We'll share the screen with you and walk you through whatever it is you need help with these 1 hour screen sharing sessions. The value there is really probably a lot higher than this, but let's just say $7,500 on that value. So again, you have everything with ThetaTrader and the coaching, and you have the proprietary research. I'm going to get through this here. I don't want to run out of time. And we also have tutorials, by the way, video tutorials. I want to point that out. That's all part of ThetaTrader. So everything valued at over $18,500. And we did this in person a lot before the pandemic, and we would have a $4,000 price on this live in the room, and people would sign up at the back of the room at a big table and desk we had there. But of course, we're doing this online, so we can do much better. We offer that at $9.97 for your Theta Trader membership. But what we're going to do here for the first 8 that sign up before Friday night, that's tomorrow night, we kind of have a what we call an early bird price, discounted price of only $5.97. And we're going to make that available to you through tomorrow night. And here's the link, cf.altivest.com/TT. So take a screen picture of that, or screen capture, or use your phone and take a picture of that. And there's a 30-day guarantee on that. So keep that in mind. So really, if you're just kind of considering it and you're kind of leaning towards doing it, you might want to jump on it and do it, because quite frankly, you don't have any risk on that membership. We'll refund that to you gladly if you decide it's not for you. Here's what the order form looks like. Just simply go to the link and you get that early bird special at $5.97. A few FAQs, tax efficiency, yes, absolutely. And we can lower your tax rate. Well, we can't, but if you're trading futures and options, they're tax efficient. So your combined tax rate can be about 10% lower simply by trading the instruments that we trade compared to trading individual stock options, for example. You'd have a 12.6% return in this example. I'm not going to jump through all the numbers, but if you're trading with us, you'd have a 14.64% return. So a tax savings of over $2,000, just because the tax treatment is different with futures options compared to individual stock options. And there's no more itemizing. You just receive a 1099 with your profit and loss. So there's no wash sales and no messy itemization. So always consult your tax attorney or advisor. And we are not advisors in tax-related matters. And I mentioned the E-mini S&P family, and then in particular the 500. Liquid, efficient, cost-effective. Look at this here. Compared to the SPY, the E-mini S&P 500, it's over 10 times greater in terms of its average daily dollar volume, and over 2.5 times greater compared to all of the ETFs around the world. So you are in the right spot if you're trading on the E-minis. A few more advantages. We mentioned volume, liquidity, cost savings, superior execution, according to the CME group. You have tight bid offer spreads. I'm going kind of quickly, but you get the idea. And we have all the strike prices that we typically need. That means granularity and coverage. So if the algorithm is looking for calls and puts to build a trade, it's typically going to find them. You know, another set of calls, another set of puts, another set of calls, another set of puts as time goes by. So that's liquidity for you. And here's a big advantage doing the dragonflies and the E-minis. With us, you're trading a dragonfly. It's placed as one order at one price. So you saw how you don't have to break up the trade into 2 separate legs or spreads or different positions. And that's a big advantage. If you're doing this with stocks, I've tried it, I've seen it, I've never seen anyone, I've seen other people try it, you can't do it. I've not seen a platform that can trade a dragonfly in securities as one order at one price. So a big advantage. So you have these sophisticated option strategies available to you here with AltiVest. You don't want to trade options like the rookies do. She says here, this woman on CNBC, in 2021, 11% of Robinhood users were trading options, but of that 11%, less than 1% actually made options spread trades. So remember, if you're only buying options, theta is working against you. That's why she said the trading options can be risky, because there's a lot of appeal for retail investors to buy options because they're cheap, but potential for profit is not that high. Again, that's because time is working against you. So we're going to kind of move forward here. Remember, we're doing these E-mini options on the Globex electronic exchange. That means all your orders are treated equally. There's no payment for order flow or free trading. It's not free, folks. It's kind of a gimmick. I won't kind of criticize it too much, but you know, Robinhood and whatnot says they're commission free, but it says customer orders are executed at prices inferior to other broker prices. So It's not really free, it's disguised commissions. If you want the broker to work for you, pay a commission from David Einhorn. So none of that with us, no payment for order flow. Everything is very transparent with us. Our rates are our comparable rates, our rates here are 5 1/4 round turn all in on the E-minis. And if you look at some other big box brokerage firms, for example, they say, oh, well, we're 2 1/4, and you think that's a lot less, but that's only per side. And then they end up charging exchange fees and clearing fees on top of it, and it makes it higher than what we charge. So our rates are competitive. Everything in Theta Trader is net of all trading costs. And of course, every client has different performance because they're all trading differently. We recommend 25,000 as a minimum account. And if you want a free account membership, absolutely. People love take us up on this offer. A $50,000 to $99,999 account, you receive a 50% rebate on that membership. If you have $100,000 or more with us, we just rebate the whole membership fee to you. So people love to take us up on that offer. All different trading account types, and we think it's important to have something like Theta Trader in your portfolio to diversify from just being, long only stocks. As we know, inflation is always with us, even if the Fed thinks they're going to bring it back down to their target. Again, their target's 2%, but even then, that's underreported. I think the rate, in fact, I agree with this gentleman here, Ron Barron. If I can pull him up here, he said that inflation is really 4 to 5% per year, even at a headline target rate of 2%. So you're always kind of swimming upstream. All of us are kind of fighting inflation. And let's see here. I think I have a few questions. Hold on while the screen is sort of pausing. Let's see here. Let me do. Okay, I see a few comments. It says I'm here. I'm here. Let me. Let's see here. Okay, so there you have it. He says inflation is 4 to 5% a year. Price of everything doubles every 14 to 15 years, and I think he's right. Talk about a Fed pivot. Well, nearly 100% chance of a Fed hike next week. And people are talking about a pivot for a year now. Let me jump in here. I'm going to put the link up here, by the way. I've got just a few minutes left. But feel free to jump in with your comments or questions. One second here, folks. Economic recovery on credit cards. I've had a couple of things here about the economy and why I thought it was important to diversify from just being long in stocks. Savings rate in April, historical lows. Credit card use is at record highs. So credit card up here, savings rate near historical lows. So just some metrics, and there's one in particular. Well, people talk about the stock market. This is interesting. Just on July 18 the other day, Microsoft and Nvidia added 175 billion to market value or market cap, more than the market cap of 462 S&P companies, and more than the value of Nike, Wells Fargo, Walt Disney, Morgan Stanley. So tale of two stocks. You have the Nvidia story boosting the stock market, the entire stock market. I mean, so it's really kind of crazy out there. But the one thing I wanted to point out was the yield curve. It has a 100% track record on being able to essentially predict or project a recession. And that's going back, I believe, since the 1930s. And of course, the yield curve has been inverted for, well, it's over a year now. And we're kind of entering that window of time where it's probably likely going to manifest itself in some real ugly recessionary data. So you have that inversion here on the yield curve, and we're not going to get into everything what that means. But basically, it's a signal that there's a lot of distortion in the economy. You have long rates that are actually lower than short-term rates, and that's not a good thing. The inverted yield curve in the next U.S. recession, the current inversion will be likely long and deep. The next U.S. recession, relatively more severe, but extend into 2025. So I just kind of wanted to touch on that. I just saw this earlier a day or two ago. Sheila Bair, the ex-FDIC chairman, she says the market's overly exuberant, and we're not out of the woods yet due to, what did she say? The inverted yield curve. So thought that was interesting that she's certainly making reference to that as well. All right, folks, let me jump to the end here, and I've got just a minute or two left. And I'm going to thank you for joining me, and make sure to take a screenshot of that link. And you can always contact me as well, Erik, E-R-I-K, at altivest.com. So that's E-R-I-K at altivest.com. And let me jump back to the end here if I can. See if it will let me scroll to the last slide, or if not, that's okay too. Let's see if there's any other questions. Someone's raising their hand. I'm talking about Stanley Druckenmiller. He thinks stock market could be flat for an entire decade. So if he's correct, you'll want to have some unique strategies available to you. But I think that's running. I'm going to run out of time here, folks. So there's just a little bit of delay, and I'm kind of at the end of the presentation anyway. But we'll put that link there in the chat for you. Make sure you have that. And we appreciate you joining us, and I'll let you go. Thank you very much. Bye-bye.
Hello. So as always, first and foremost, I want to take the opportunity to say thank you all for being here, your participation. As we're all understandably busy, right? So we appreciate everyone, and like I said, your attendance, and we appreciate the hosting of the event and so on. Anna, thank you so much. And hopefully we'll make this a little bit fun. So look, today I'm going to do something a little, let's call it unorthodox maybe. And I'm going to step outside of I think the entire box, right? So for example, we're not going to be studying a PowerPoint today. As if any of you have ever seen us in presentations before, you're likely going to realize that this is, again, like I said, a little out of our wheelhouse. We just decided not to do it this time. What we really wanted to do was get out just straight to the live charts. We found that it's, as we would say in our live room, we are not entertainers, right? It's not that we don't want to be per se, it's that for all intents and purposes, maybe we're just not that good at it. But what we have found is that people enjoy, activity, movement, actual price action on the chart, and so on and so forth. So in order to discuss and cover what we wanted to address today, there's a couple of things I need to do to preface the presentation in and of itself, right? So what we want to do is make certain that everyone understands that this is solely for educational purposes only, right? Trading, unfortunately, contains substantial risks, and we're never going to get rid of those. So our best bet, if you will, is simply to try to mitigate them. Okay, so for all intents and purposes, you can see that we have a trade on here. It just kind of worked out, obviously, as you all know, it wouldn't be possible, right? We couldn't have planned this. It just worked out. So we have this trade on. I'll explain it to some degree, and then we'll just kind of move forward, because what I want to talk about today is scalp trading. managing orders on the fly. So we want to display what we call our PFA order suite. And I will get you all some links. I'll do my best to get them into the chat, things to that extent towards maybe the end of the session. We are going to do a follow-up event. So as a matter of fact, why don't I go ahead and do that? I believe this should go. Let me make sure it's going to everyone. Okay. All right, there you go. So there's a link in the chat just posted. Mind you, that is the chat, not the Q&A. So if you want to participate in the event, it's of course free. There's no charge or anything like that. Just register on that page. Folks, look, at the end of the day, you can always just click on subscribe if you don't want to continue to receive emails or something like that. So we're not going to complicate that to any degree. Okay. But we do want to make you aware of certain things. And going into this presentation, as I said, I want to preface with a couple of things, right? Number one, with this disclaimer. We all know that there's risks, but of course we always need to cover that and just make it stated, and just in the event that there are newer people to trading and investing. So we have this current trade going on, like with anything. Okay, so this is all hypothetical, and we would run through any version of risk. I will walk you through the trade in and of itself really quick, and then we're going to get to the tool itself and how we can use this. Now, here's my second, don't mean to be redundant with the terminology, but as far as prefacing things, so the second thing would be, I am not a scalper, okay? Personally, so that's not our forte. What I've stated in our previous events and with our live room, the free sessions, things to that extent, I'm so super excited about this, because as we go and progress, we've been doing this for quite some time, by this I mean educating and so on and so forth, for over 13 years. It's been a long beautiful road, and we've been very fortunate and lucky. But there's, along the way, there's been this progression, right? And not in the methodology. Ironically, today, as we were just talking in the live room yesterday about this, today we go back and we've reviewed, we had some videos from, I think it was 2011, a long time ago, 12 years ago or something. And it's ironic because we're saying the exact same thing. So when we're talking about methodology, it is exponentially applicable to all asset classes, all markets, and it's very consistent. So it's not going to change. Excuse me. What the progression that I'm referring to, however, is imagine yourself being extremely uneducated in certain things, such as myself. I was extremely uneducated in software development. I had no idea. So I was not did not go get my engineering degree for software engineering, anything, nothing like that. Had no idea what the capabilities were or even could be. I mean, if you think about it, 12, 13 years ago, software was kind of one of those things that, it just wasn't what it is today. So the progression throughout time, we had this methodology and we had this very objective way of doing things. So that's great. That's how we could be consistent and so on. But there's still this level of effort that goes into it. And your mind, right? You have to always be on top of things because you're functioning at a level that has to recognize calculations, and you have to be able to do those very fast on the fly, especially if you're short-term trading. And again, to be clear, I don't do a whole lot of that myself. It's not that I don't want to, but time doesn't permit, and so on and so forth. So it's very different throughout this progression, though. Everything we've done. So you're going to see, we're going to talk a lot about the software. For all intents and purposes, you can see the trade at hand right here. We can go ahead. This, let me show you. So this here, what we call the trigger line, as you can see, what we've just done is moved our stop to break even plus commissions. That's a version of automation there. So once we reach a certain point, we want the software to make our lives more efficient. Okay, so simple things like this. Now that's not new. Okay, to be clear, we don't want to come otherwise. These things have been around, but what we've done through our own coding efforts and software efforts to some degree is learned, right? It's an evolution in and of ourselves. So we've taken and every piece of the software, which we're not going to be able to cover it all there. Trust me when I tell you there's a lot. But every piece of it has come out of necessity. So we go in, we build a piece of software because we need it to make our lives more efficient. So again, once I rather realized quite some time ago, 12 years or so, once I realized that it was even possible to build a piece of software that can make life a little bit easier, we started that road, right? And it did. It made things easier, but of course there was things that are the hurdles, if you will. You got to get over the hurdles. Okay, so we start trying to get over the hurdles and jump them and so on. And again, we continue the evolution. What we arrive at every time we build on something, it's like an epiphany that goes off that says, oh my word, there's another possibility that has now come into play. And that's one of the things that we're going to talk about today. And I'll be frank with you, this is a more recent development, not the order management, but the certain capabilities that we're going to be looking at today. Yeah, so this is a little bit more recent, I'd say, in the last year. And again, folks, I'm looking for people because I'm super thrilled about this, excited, and I want someone, meaning, well, a lot of people, obviously, but I want and hope that there are people out there who can take this and run with it, much better than I could, okay? So these are things on a scalping level that I'm going to look at today. I'm going to go ahead and show you some of the features and functionality and how this could benefit a scalper. Now, again, let me just say it because I don't want any misconceptions or anything like that. I predominantly am a swing and position style trader, okay? Again, it's not that I don't want to day trade or, scalp or whatever you'd like to call it. Time doesn't permit. And if there's a question mark there, can I do it? I don't know. Maybe the time does or doesn't permit. For me, that's a no, right? So if I'm questioning something, there's expressions that we use in our live room all the time. And one of them is quite simply, if it isn't clear to you, don't trade it, okay? So that becomes applicable here for me. If time's even a question, then don't do it, all right? So I want to give it 110% or 0%. And I've opted, unfortunately, for 0% for many years. I say unfortunately, but also fortunately, because if you're a swing trader, you probably have recognized that you can achieve as well or even potentially much better results, depending on the method, of course. Okay, so let's say hypothetically that I'm a scalper. Let's get right to it. Yeah, I told you we were going to spend some time on the live charts. As you can see, this is real-time data. Everything you're going to see today is indeed real-time. You're going to see different colors. You're going to have some questions. That's perfectly fine. I'll address any and all of them to the best of my ability, based on time, of course. Let's see, we got started at 12:30, so we should have until about 1:15. We're doing okay. Okay, so here, as you saw just a moment ago, we hit that area right there with the trigger line. Well, in fact, I moved it up just a little bit to display the automation capabilities there, right? So let's pretend for a moment. It's always fun, isn't it, pretending? My goodness. So let's just pretend that we, or rather I, in the moment, am a scalper. And there are instances that I've gone over recently with in our free events, etc., and even in our daily live room and so on. But here's what I want to cover with you. So let's say that this stop was still sitting up, maybe above. So what I can do, and this is the efficiency that we need to look at. These are capabilities that I never even, I didn't even ponder this before because it never really dawned on me how efficient things can be. So we have this menu up here. Okay, so there's a plus. This right here, if I hover over it, it's going to tell you it's a primary entry menu. If I hover here, it's going to tell you secondary entry menu. So this is simply a NinjaTrader indicator. It's applicable, in our opinion, to any and all NinjaTrader ecosystem. And I say that because this is not pertaining to methodology. Now, when we get into the zones, which is, of course, why we entered this position here, we were actually bearish. The market, we went bearish yesterday, and we're cautiously bearish. In fact, we were looking, I'll go, you know what, let's pause on that. I'll go back into our analysis momentarily, and I'm happy to walk through that. We specifically looked, at the major index markets. We also looked, you can see here, we have a plethora of markets that we go through. We go through lot more, but predominantly these are the markets that we just happen to go through, as those are the general consensus of the room, if you will. Okay, so back to the tool. I want you to focus in on these two menu items. Now, the ones to the left, starting here at our tools menu, and then you have the zone menus over here. What I can do is just go, we'll just go toggle those off for a moment, right? So pretend that they're not even there. And then what we would end up with is 1, 2, and 3. So if we're talking about the order suite, which is what we're talking about now, it's called the PFA order suite, okay? And that's going to be these these icons right here, menu items. Now, I've submitted the entry, okay? We've gone down, we had a break even. You can see in fact, you can see my draw object. So I drew this in earlier with my anticipatory outcome, and that's where the trigger line, target, stop, all that good fun stuff is derived from, okay? So I'm a scalper. Again, we're pretending here, right? And so for whatever reason, let's say that I want to soften the blow, meaning my risk is X amount and I want to reduce that. Currently, I have a total of 10 contracts. So if you notice in the drop-down menu, which is very different from the secondary, but only because we're in a current position. So this right here was submitted via our primary menu. And now you see different available options. So if I wanted to remove from the position hypothetically, okay, what I can do is I can come down here and submit this, all right, and I can move to current price. And if you notice what has just currently happened, probably what you thought would have happened, right? I removed a single contract. So with the tool, I can do this in a matter of seconds and be very efficient with it. So let's say that, again, I want to go back and I want to soften the blow. So if the risk in the trade in and of itself is, I'm going to throw out just hypothetical easy numbers, yeah? So we're saying we have a risk of $1,000 approximately, okay? In a scalping situation, it's defined scalping, if you will, right? So I'm talking about very fast moves in and out. You know, I personally think of scalping a little bit different than day trading, but to each his own, okay? So scalp trading is just getting in and out, again, in my opinion, very quickly, all right? So we want to make abrupt decisions very fast. So I need a tool that can help me accommodate that. All right, so I just removed a contract, right? So I can remove another contract if I want to. And note what I'm doing here, okay, is you'll see the reduction of contracts, of course, as this is filled. There you go. So now you'll see that we have 8 contracts, and we also have 8 contracts on the OCO here. So again, it's just, kind of maintaining, okay, well, another contract was removed, I need to account for that, and so on. But here's how we begin to soften the blow. So if I'm in profit, all right, I can remove as many and or as little contracts as I want to, of course, depending on how many I have. So if I have 2 contracts, obviously I'm only going to be able to remove 1 without closing out the trade in and of itself, okay, or in its entirety, excuse me. So I can, again, using the terminology soften the blow, I've removed a couple of contracts at approximately 45.79. So now, instead of continuously removing contracts, which of course I could remove more, and I'll show you some of the features here. So let's go ahead. We're gonna have a reduction to 5 contracts. The reason I'm doing that is because I started with 10, right? So let's say that I want to get about half the way to my target, and I have 8, and I want to remove an additional 3 because I want 5 total contracts. As I just said, I want to have 50% of the position roughly, all right? So now, as I'm averaging out of the position, conversely, I can do the same on the upside, right? So we're gonna have to dive into this a little bit, but now I can switch this from remove to, from position, excuse me, to add to position. So now, instead of going down and saying, hey, hit a target, so to speak, right? I'm saying, no, I've already taken 50% of the position out at approximately 50% of the desired target. So if for whatever reason we go back up, well, here's what I can now do. So let's take this stop, all right? Let's take this stop all the way back up to its original point, which was, just above the zone that you saw moments ago. But I don't want to focus on that again. We're not really trying to make this applicable to methodology per se. We're simply showing the order suite, which is applicable to anyone and everyone using the NinjaTrader platform. Okay, so let's say that right now price just declines. Oh, great, right? Because I mean, that's wonderful. So then we end up at our final destination. We have a risk reward 1,800 with 56, not to mention the however much we've already removed, right? I could go do the math on that, but roughly like 2,000 or so, okay? Because remember, we removed half the position at half the distance. So what I can do is I can go back up now, right? So again, scalping, this is very important. This is applicable to anything and everything. It can be used across the board, but I just have this feeling, right? I never trade on feelings. Do not get me wrong. It is as methodical can be. But do you ever get this sensation where you're looking at something and it's just so apparent, right? And that's what I wanted to share with you all today, because just being transparent with you, as I always am, I don't scalp the market. So again, I'm looking for people who are scalpers, if you will, or see something, that I don't, or what have you, that can absolutely take this and run with it. So I know the capabilities, but I know that there are people out there who maybe don't and are seeking the capabilities. And this is kind of what the realization I had. And not to mention, I've worked with my colleague, and we've had some conversations pertaining to this as far as what we want to do with it, perhaps looking into strategy building and things like that. So we'll look back at it ourselves and so on. For now, however, what is happening in this position? Okay, so what was initially this much risk, okay, so again, as I said, we were going to dive a little bit deeper into this. So we have approximately, well, I would say almost exact, but let's use the words approximate. So approximately we have this much risk at play, right? Initially, so remember, when we had a total of 10 contracts, we had this much at risk, but it was twice what this is, you see, because we had a total of 10 contracts. So what we did was we went down below, and remember around that 79 mark, which is ironically almost exactly what what the risk was, and we removed half of the position, okay? So if you follow my train of thought here, what happens if and when we go back up? So let's talk about two different scenarios here. Number one, price doesn't go back up. It continues the descent. Wonderful. I don't think anyone out there is going to complain about their profit target getting reached, right? Of course, we could go adapt this if we wanted to. I mean, that's at your own accord. If you have a methodology as far as trailing your stops and things to that extent, great. Then you could, of course, we have this currently set at 64.50. This is adaptable, so I could move this anywhere on my chart that I desire, right? Okay, that's perfectly fine. So that can be done. It can be accommodated. But again, we're not going to typically complain about our target. So that's option number one. We just don't go back. We go on, we reach final destination or better maybe, and everyone's happy. Conversely, we go back. All right. So we've had a little bit of a move away, and this is very typical, I would find, in scalp trading. All right. So kind of the premise of today. Yeah. So if I go back up here and I take this label, remember I had the remove option down here. So I removed 5 contracts. So let's say that I want to average back into the position. So I want to end up with a total of 10 contracts if possible. But what I'm attempting to do here is, as the terminology I used before, soften the blow. I'm looking at a reduction of risk. So that's ideally what I want to do. And how do I do that? How do I end up with a total of the same amount of contracts that I initially started with, but half the risk? Okay, I've just done it. So now all I have to do is go back up, and I have massive amounts of options here. Number one, I can simply do this and submit that. So what I've now done is I've taken half the position off, which means half the position at half of the destination, okay, half the target, if you will, right? Remember we did this, okay, followed by that. So if I remove half of that, which I've already done, and then I go back up, all I'm doing is cost averaging back into the position. So let me throw out those hypothetical numbers again, okay? we had at risk $1,000. That's this right here, with a total of however many contracts we started with. So total of, in our case, we're using, these numbers are really not even close, but so that's fine. I think for numbers' sake, it's okay. So we're going to say that this is equivalent of 10 contracts, $1,000 risk. This is just for mathematical purposes, trying to make my life easier, right? Again. Okay, so on the downside, we removed 50% of that at the same distance. So what did that do? Well, that took $1,000 on the way down, and it took 500. So that's now the P&L is saying, okay, well, that's 500 in P&L, yes? So if I now go back up and I resubmit those exact same contracts, here's what I want you to try to think of this as. Essentially, we just bought the market right there at 5 contracts and sold it right here for 5, okay? So in other words, we just made profit from the downside back to the upside, which in effect removes half of this. So if originally that was 1,000 at risk, it now becomes, even though I've increased my contracts back, it now becomes 500. Why? Because I just made 500, okay? So I increase my P&L from 0 to 500. I go back up to my initial entry, re-enter the exact same amount of contracts as to which I exited. And again, essentially, I've had a reduction of 50% there. Now, let me be clear. This could have been 60% or 70% or 40% or whatever it is, right? It doesn't, I'm not necessarily advocating 50% exactly. I'm simply trying to tell you that however far we go in profit and then we remove the contract, so essentially we're cost averaging out of the position only to turn around and potentially cost average back into it. So it's just a concept, right? I hope so. We'll take as much time as we need to conceptualize what I'm trying to, portray, if you will. All right. So hopefully that makes sense. And let me just go back and say, so let's, using the hypothetical numbers, we closed out on approximately $500, right? Well, what happens if we continue down here? All right, so this is going to show us, and as you can see via the tool in and of itself, all of this, as I previously stated, comes from necessity. These are details on each of the order labels that we need. We need to understand them. I don't have time, especially as a scalper, to do math every day. I don't want to do that, right? So if I come in and I have to say, okay, today I'm trading, and this will make sense, I know, especially for you futures traders, right? So let's say I'm trading the S&P. Okay, great. Well, $12.50 a tick. Okay, got that. Now I'm going for 10 ticks. Okay, $125. Got it. So I'm having to do that math very quickly in my mind. But now I flip over and I'm trading the Dow. Because the Dow trades at $5 a tick. So I'm going for 10 ticks. Well, that's $50. Okay, very different scenario. So now I have to have, if you think of it, essentially I would need like an Excel spreadsheet, right? With all the different futures markets and all the different tick values and increments that they move in, right? Because the Dow moves in point increments, 1,000, 1,001, 1,002, so on and so forth. The S&P moves in quarter increments, 1,000, 1,000 quarter, half, 3/4, 1,001, right? So all of this is very different. And I mean, even saying that out loud and you hearing me say it, it's kind of exhausting, right? I mean, it will wear you out in the fact that you have to do all of that math. But today, with the technology that we've fortunately been provided, we don't have to do any of that because it's right here on the tab, okay? And it's being calculated constantly. So if I go down and I remove contracts, it's going to calculate and recalculate according to the amount of contracts remaining, okay? So again, this is just a concept that I really wanted to get out to everyone. It's something that, like I said, I've been pondering a lot. I know I'm gonna find the right people who are looking for something like this, and it's just some evolution concept, right? But once I started, I have this realization, and I'll tell you how it came to fruition. So I'm testing, the software, right? So the idea was exactly this, but let's say that I'm swing trading. So what I wanted to do was be able to dollar cost average, like I'm doing now, kind of, right, in and out of positions. I didn't really have that capability. We had all the OCO, and there's a lot of functionality in here, folks, just so you know, so much functionality. I will go through some of this. In fact, I'll get to that in just a moment. But I really wanted to just get this concept out to the best of my ability, very quickly. So that's the concept as far as a scalper cost averaging in, or rather entering a position, cost averaging out, and then in turn, cost averaging back in. You can take your risk and you can reduce your risk by certain percentages. If you're trading 2 contracts, again, we're now talking in 50%, right? If you're trading 3 contracts, we could be talking about thirds, 33 and 33, right? So, you're talking about 10. So obviously you're talking about the potential of 10, 20, 30, 40, up to 90, percent, and okay, very good. That was a little stressful. Sorry, folks. We'll try to get back to it. Let me get my screen sharing going again. I know that they've been doing a bit of, let's see, get my screen up. There we go. Yeah, so the fiber optics and everything, I know they've been doing that. So hopefully we won't have any further issues. If we do, I sincerely apologize. We're getting close, got about 14 minutes left though. So, okay, going back to it, I just want to dive into a little bit of the features and functionality, okay, of the software. So with everything that you've seen thus far, let's just kind of dive back, double back, if you will. All right, what you've seen is we have the capabilities of doing everything from our menu. Now, what you didn't see is the zone suite in themselves. So let's go here and let's turn back on that supply. All right, so here's where we entered the position. I could have entered directly from the zone, okay? But I didn't really want to touch on that too much because, again, as I said, I don't want to make this solely applicable to our methodology of trading. So again, focus on these 3 icons here. In the menus in and of themselves, initially it looked like this, right? So we had all these different options. The simple version would be to buy and sell, right? RBRs and DVDs, those are these lines here, okay? So it's not something to really worry about today, but suffice to say we use those for continuations, breakouts, etc. All right. Give me just 1 second, folks. Goodness, all of a sudden it got complicated, didn't it? Okay, there we go. So back to it, right? The order menu, we have the buy and sell, RBRs and DVDs, which again, as I just stated, are the horizontal hash lines. A lot of people have questions about, what do you use them for? So again, those are our version of continuation patterns to which we use them for breakouts only at very specific times, okay? So therefore, we put those options in our menu, okay? And then we have simple versions such as up and down bar. So what that would do is submit an entry only on the close of a up or down bar. So if I opted here for a down bar, I could select that and it's only going to submit my entry if the bar closes lower than it opens, and it's going to submit it directly on the close. Okay. Now another thing that's very important to understand about the different menus here. There are capabilities here that have never really been put out there before. We've been doing it for quite some time. Again, out of necessity, it just turned out to be this beautiful thing. Here's another evolution concept, right? So, a while ago, way back when, we really needed the ability to hedge the market. So this is again how this came to fruition. We wanted to hedge the market, but we didn't want to have to go across these the different markets to do it. So let me give you an example. Trading an ETF fund, I may want to hedge against it with futures markets, okay? So what I would do is I would go out and I would use and set my primary. So if I hover over this, note that it shows the market being the ES September 23. And that's simply because that's the market that I'm on, okay? And this one's gonna be that too, but I could go into my settings and change this to whatever I want. So let's say for all intents and purposes, I'm trading the Qs, all right? So triple Qs, the NASDAQ ETF right now, or I could be trading the SPY, which is the SP 500 ETF and so on. What I needed was the ability to analyze what I am actually trading and then protect against it, okay? So what you can do with the order suite is we can submit orders to essentially any market, right? Provided you have data, of course. So we can submit an order, and I'm going to give you a definitive example here so we're not kind of guessing at what I'm saying. So let's, hypothetically, let's say that I'm on the SPY, okay? Or the Qs, like I said, whatever, but since we're on the S&P 500, I guess I'll go with that. So SPY, S&P 500 ETF fund. I'm trading X amount of equities or shares, excuse me, of the S&P 500, and I want to hedge against that using the futures markets, okay? So I can take and never leave this chart. I can analyze it, determine where my profit targets, stops, trigger lines, etc., where they all are. I can simply go to my secondary menu, and I can come and I can submit an order to the futures market. And remember, pretending here, we're hypothetically stating that we're on the SPY, okay? So from the SPY, I can go into my secondary menu and I can submit a hedge position without ever leaving the chart. Now, here's the evolution. That's what I needed it for. That's what, it's what we wanted to do. Well, little did we know we were going to come up with 50 other things that we could do with it, right? Such as to say, I can, this is a very tricky thing, I have to be clear about it, play the same market both sides. Okay, so what I could do hypothetically is set up this position, which is on the sell side, all right? And I could have my, targets and all of that. I could have it set and so on. And then I could find, in our case, we're going to use supply and demand, and we have our, very specific methodology. But again, I'm not trying to, go there with that per se. But note that there's an entirely different set of labels here, okay? Same as up here. Now, I've not opted to add to the position or anything like that because I'm not in a position on my secondary. But if I were to go down, I could submit this and get this, filled. If I were to submit it right now, it's not going to do anything because it's a trigger line, okay? Meaning the only way that order is going to be submitted is if price goes down and actually touches the label in and of itself. So when I say play both sides of the market, I'm not literally meaning I want to always be playing both sides of the market, okay? That's to be clear. In our methodology, of course, we're always looking to both sides of the market, and we play this little game, buy, sell, or nothing, and so on. But ultimately, I need to be aware of what I want to do. I'm just trying to give you examples of the capabilities here. So I could go down and hypothetically, let's say that I've gone down and I found this superb, demand level for whatever reason. All right, so let's go down here and we're going to do something, kind of like this. I'll show you. All right, so maybe I'm going to go here and I'm going to submit an order as such. And what I'm doing is I'm saying, okay, well, I'm short the market and I want to reach my target. So maybe I put my target before this area, right? I would want it to be before the entry. So on the downside, my target gets reached at 45.10. And without being in front of the screen, I then turn around and buy the market at, in this case, 44.62 quarter, right? So you can see that the capabilities, they just began to grow and grow and grow and throughout the progression that we previously discussed. These are the little things that have happened, okay? So a couple of other things that I'll talk about really quick. I haven't even begun to, I literally have not even begun to touch the surface yet, which I'm gonna do. Just register for that, it's free. We'll go through all the benefits and all the capabilities of the software and so on. But I'll touch on a few pertaining to the order management. So let's say that something happens, all right, big mistake or whatever. I've made a mistake or well, here we go. It's perfect timing. Just lost internet connectivity, right? Uh-oh, that's not good. So we lose internet connectivity or our power goes out. You never know, okay? I don't know what the case could be. There are many. So something happens. And so I lose all of my data. Now, as you know, or you may not know, with NinjaTrader's Chart Trader, if you submit an order and it's not filled, you have no protection as far as the exchange is concerned, okay? So you submit your order, that goes directly to the exchange. these are called server-side OCO orders, right? Which means that your bracket, in other words, your stop and target, are held locally. Okay, so this is very important, because if that would have happened just a moment ago and I would have lost, let's say, in my case, I didn't lose power or anything like that. We have battery backups and all that good fun stuff. But anyway, that can certainly happen. And in such a case, it can skew your position. You may end up with a naked position. Okay, so let's hypothetically say you lose power. Well, your entry is already sitting on the exchange, but your bracket order is not. So that becomes problematic, all right? And in such a case, we have, again, out of necessity, we have built in an option, right? You're not gonna see it in this menu because we always try to build things very user-friendly. So we remove the things that are not of use, if you will, at this time from the primary menu, simply because we're in that position. So I don't need all these, I don't need the RBR and DVD entries and so on and so forth, because I'm already in one. Okay, so it's just, again, in an attempt to be user friendly. But I do want to show you here in the secondary menu, do you see this option here, attach OCO? So at any given time, if something goes completely wrong, right? If it just goes completely wrong, I can then go back and do it with a click of a mouse. And what it's going to do is reapply an OCO to that order. One other thing that I want to touch on, I know we're pressing on time here. The trigger lines, there's two methods of entry that we allow, and each and every one has its own settings, which is great, because we can specify limit market orders for targets, stops, entries, and they're all broken apart, right? As opposed to the conventional way where they're kind of all one or nothing. You know what I'm saying? So a lot of features and functionality, little bells and whistles, as I said. But the two different options would be, number one, we call them the trigger lines, and that's what you're seeing here. These are labels on the chart. They're only activated if and when touched, okay? Option number two is your standard and or what we call default method, which is going to submit the orders directly to the exchange. So here's the benefit of not doing that. No one knows where my stop is. So for a scalper, this is exponentially important, right? Sweeping the stops, you've probably heard this a lot. And in such a case, they can't sweep my stop because they don't even know that it exists. And I'm not saying they can't hit it. Obviously, if they hit the label, they'll grab it. But I can move that stop anywhere that I desire, and they will never be aware of it, again, because it doesn't exist in level 2 data, okay? It's not sitting on the exchange, so there's no way for them to know. So same with the target, as well as the entry. If I flip those over to the default method, maybe I'm doing swing and long-term trading, something I don't want to deal with it or whatnot, so I'll just go ahead and submit them to the exchange because they're probably pretty big anyway. In such case, everything goes to the exchange, and then I can even close down my platform. Okay, all right, very good. So a concept, again, I wanted to bring to your attention, guys and girls. Unfortunately, I only have 2 minutes, so let me grab some questions if you have any, and otherwise I'm going to get you the link. I'm going to repost that link, okay? And I just want you guys to go ahead and register for that if you want to learn more. Again, we're not restricted in time in our room, so we'll go through every single detail of the software ongoing and free training, etc. So there's the link for that. If you want just general information, please do check out our homepage. There you go. You can check out that as well. And then again, just let me know if you have any questions. I don't see any, but I could be missing them. I don't know, Anna, if you see any coming in or whatnot. But yeah, I have the chat and the Q&A open, and I don't, let me see. I don't think I see anything coming in at the moment, unless I'm missing something. Yeah, just kind of help me out there. If I am, just let me know. Otherwise, folks, again, I just want to say thank you for your time. That goes for everyone. I know it's very valuable and very important to us all. So we want to build the best community and help people to the best of our abilities. We will be happy to teach you about our methodology in our upcoming follow-up event and things to that extent. But today I just wanted to show you what some of the capabilities of the order suite is. And I'm sorry, this is, I totally forgot, but this is indeed something that I'm going to post in there as well. is the direct link to the PFA order suite. Okay, so that link will direct you right out to it. I didn't see any questions coming in. Again, I apologize if I did. Feel free to email us directly from our website. However you like, if you want to give a phone call, whatever works for you, we'll make sure that you're well taken care of. Okay, God bless you all. Thank you. I'm going to turn it back over.
All right, everyone. Thank you. Thanks first to Investors Expo for inviting me to participate. And my section is what place do gold and silver serve in the crypto community? So this is an article that's put out, you can see, and it goes through a lot of reasons why gold-backed stablecoin makes sense. What is a gold-backed stablecoin? And I'm not going to read this whole thing to you, but I will hit some of the high points. Gold-backed stablecoins are cryptocurrencies that attempt to peg the market value of the price of gold to make it a less volatile financial instrument. So let me stop there and talk about what my basic amount of work has entailed over the last 40 plus years. And that is that a sound money system is one that provides more equality through the richest to the poorest. When you have to actually get something of value for your labor, your intellectual property, whatever you do for work, and it's rewarded with something of value like gold or silver, it's a lot more of a system that's, again, fair for everybody. It's not perfect, but it's the most perfect we've ever had. In that context, there's a lot of negativity surrounding the precious metals from the mainstream financial media. And the reason being is that when people buy gold or silver, they basically hold it or save it like a savings account. So there's not a lot of fees for the Wall Streeters to gather when you are a precious metals aficionado. Whereas if you're in the stock market, bond market, whatever, they're constantly persuading you to try to trade in and out or move stuff around or change your mutual fund, or even if you're in some of the more conventional investments, there's fees involved that they get to gather on a regular basis. So the gold market has proven itself time and time again throughout history. And yet you'll hear pundits talk about stocks doing better or bonds doing better. In certain time frames, that's true. But in the long run, gold prevails. And the reason gold prevails is because it's really money and people know it, some don't, but certainly the bankers do. And throughout history, it's been voted upon by the marketplace, in the free thinking marketplace, that it's the ultimate monetary asset. If you take the example that I like to use of when the Federal Reserve was founded in 1913, right at the end of the year, you could really say 1914, it was Christmas 1913. And you had a very rich uncle and he gave you $1 million in cash. And now you wake up 120 years later or 110 years later, and it's 2023 and you have $1 million. If you had gold, you would have over 48,000 gold pieces, because gold was $20.67 the ounce, and that would be worth $92 million. So what would you rather have after 110 years, $1 million or 92 million? And what that shows is the depreciation of the dollar. So all the stable coins, and they call them, it's interesting, they always call coins, Bitcoin, stable coin. Why is that? Is that something that, I'm digressing, but is that something to do with the gold coin standard? Something that is inherently known at maybe our subconscious level, that the best thing we can have is something of value to interact with each other, so that when we're doing labor and we're providing a service or some type of good, that we're actually getting something for it. So I digress, I'll come back. So all these stable coins that exist now, with Tether being the primary one, it's based on what? The dollar. But I just showed you 110 years, the dollar's lost over 90% of its value. In fact, it's worth about 2 or 3% of what it was in 1913. and that's stable, you got to be kidding me. It's not. And then if you dig in a little deeper into Tether, which I have, and I can't prove any of it yet, but what is their backing? Is it, did they put it all into the bank and it's all in US dollars or in T-bills? No, they bought commercial paper. It's rumored that Evergrande is something that they invested in, which of course went down the tubes, which means that that $1 that they purportedly have as a stable coin isn't so stable if the truth comes out. Now, the reason it may appear to be $1, and perhaps it is because of the fractional reserve system, or just the way big entities like that operate. Not everyone is going to cash out at the same time. So as long as they can float a lot of bad debt and don't have to show it, and the transactions that they're doing on a daily basis is say 10% of what their holdings are, you're good. So a lot of these things that are really unstable, if you were, everyone decided to, perform, I'll call it a bank run, but performed the idea that they really wanted their money back. They wanted to move out of Tether into a gold-backed stable coin, for example. And everyone did it. And this is very, very, very unlikely. The point being is that with the way that system operates, they can get away with stuff that is undetectable until you really pull the covers back all the way. So enough on that. Going through the article, stable option, the volatility affects cryptocurrency performance in the market. In some cases, volatility is beneficial, whereas in some cases it may have adverse effects, especially when prices fall or drop straight at a high rate. However, gold is a stable asset, holds stable value. It doesn't fluctuate frequently like Bitcoin. Investors find this form of digital asset safe to keep their funds, as it is one of the most stable markets today. Help make investment decision because of a stable option. The price fluctuation of gold-backed stable coins are understandable, aiding investors at the same time to help them make the right move. Liquidity. Gold-backed stable coins offer opportunities to utilize gold as a medium of exchange. Its widely accepted store of value can be accessible to buyers from all over the world. Hence, the barriers to entry into the gold market are also removed with this new innovation in the crypto world. For anyone who does not have the funds, cryptocurrencies allows them to invest in fractions of a coin to stake their finances an equivalent amount of gold in the company's holdings. No doubt, gold-backed stablecoin development is a great alternative for liquid assets. And I would add on to that, that one of the problems with the precious metals is barrier to entry, meaning that, there's 2 billion people on the planet that live on like $3 a day or less. I mean, their opportunity to buy gold is basically nil. But in the crypto world, you can buy gold or silver on a fractional basis, as I just read, which means someone that's living in Mexico, Indonesia, Turkey, Argentina, or what have you, that's facing frequent inflation, and precious metals are about the best thing they can invest in, now have the opportunity. So that's something I'm very happy about. I am involved with one of these gold-backed or gold and silver-backed currencies, cryptocurrencies called LODE, L-O-D-E. If you're interested in finding out more, you can go to ag.lode.one, ag.lode.one. There's some videos on there that kind of explain it. So I want to talk about silver now. We've talked about gold being a stable coin and why it could be advantageous. The other side of the story, of course, is silver. It's hard to talk about gold and not talk about silver. What's interesting about silver is that if you look at a price chart of silver going back 4,000 years, the gold-silver ratio never got above 20 for all those 4,000 years, less the last 120 years or so. So what changed? And it's obvious, but I had to think about it for a while. But when silver and gold have the same function, which is money, the ratio stays pretty close to what the natural ratio is. And when silver was demonetized in 1873, which it really was remonetized later, but regardless, Silver became an industrial commodity and money. Yet the money side has dwindled away from most of the consciousness of the modern world because it just hasn't been used that way. Banks do not hold silver as a reserve asset, but they do hold gold as a reserve asset. So putting silver back into the monetary system through the blockchain is extremely powerful because it's a question of supply and demand, and the amount of silver is not very big, and the amount of demand for a stable coin or stable money is huge. In fact, it's going to go exponential as the dollar degrades at a faster rate, or in specific currencies, like if you were in Zimbabwe or Argentina or Turkey or some of these other places that the currency is depreciated at such a rapid rate, you'll do anything to get out of the currency and into something that will preserve your purchasing power. So coming back to this article, deflationary, the robust fiat currencies are highly prone to inflation. However, gold is deflationary. It means it is not affected by inflation, which makes it one of the ideal investment options for crypto enthusiasts or investors. The deflationary characteristics of the gold assets provides assurance of the value maintenance to investors. And gold will fluctuate, but really in a way it doesn't. And let me explain. An ounce of gold has the same mass anywhere in the universe forever. So it's a constant. There's no doubt about that. An ounce of gold is an ounce of gold forever. What fluctuates is the paper price of gold vis-a-vis different currencies. And that's determined by the market. But gold is stable. In fact, the most stable. Final words, the key factor that leads many to say yes to gold-backed currencies is transparency. Investors always urge for the maximum visibility to be confident that there is gold stored in a highly secured vault. Transparency is not only the reason why investors show interest in gold-backed stablecoins. The above listed points show why this investment option is so popular among investors and at the same time gaining traction with everyone worldwide. The rush for gold-backed stablecoins has encountered a major spike in growth in recent years. You may also want to invest in the same. It's crunch time to hire a reputable gold-backed stablecoin development company. They're touting theirs, and I'll go ahead and see if I could keep on the same screen here and go to ag.load.1. And hopefully my internet's doing fairly well. So this is, again, I'm associated with this. I have invested in this, so therefore I'm biased on this. But welcome to the Load Community, birthplace of honest money revolution, a global system built with real money, created by the people and for the people. We only have 14,000 active members, which is very small. You know, we should be in the 114 million range. And I think we will be as things progress. The main hang up on the load program, as I see it right now, is that the competitors in most cases provide a debit card where you can spend your gold and silver in the marketplace, transparent to the merchant, because all the merchant sees is a debit card. It interfaces with the banking system as it exists, and on the back end, you're debited out physical silver, gold, whatever you are using. And that is a big plus. The Load Project, is still not had a debit card in physical form. They did have a virtual card, which I used, which is just the 16 numbers, an expiration date, and a CVC number. And so I used it, and it worked perfectly, but it was only virtual. So you could only use it basically on the net for like Amazon or something like that. You can't take a virtual card to the gas station and buy gas. You need a physical card. That is coming. It keeps being delayed for various reasons. I think it will be available within the next 3 months or so. So if you want to wait until that's in place, certainly be my guest. Reinventing money together. Won't read this all. Join the movement. Explore the possibilities. I'd love to play this Imagine video, and I'm going to play it for just a minute. If it doesn't come across for everybody, just tell me and I'll turn it off.
Sure. Imagine a world where your money is protected by a standard that has stood the test of time. Imagine a system where your money is worth more than its weight in silver. Imagine that you, along with millions of like-minded precious metal enthusiasts, now have access to a powerful tool that enables the construction of sound money for everyone. Welcome to Load, the future of money. The future of money is being constructed right before your very eyes. Yep, right before your eyes. Load is a global community of sound money advocates with the sole mandate to restore silver to its historic prominence as a medium of exchange and unit of account for the settling of global trade and commerce. Utilizing the power of distributed ledger technology known as blockchain, it is now possible to digitally tokenize physical grams of vaulted silver and put them to work on the internet as a store of value. The blockchain makes it possible to keep track of these grams of silver to infinity as millions of global users transact on mobile devices and laptop computers. The Load system creates safe, secure, stable, borderless silver money. The powerful Load silver money system levels the economic playing field, making silver accessible and easy to spend and send for anyone, anywhere, anytime worldwide. The system enables the creation of modern money, known as AGX Coin, which is the world's first digital silver money designed for a global community. AGX coins make it possible to pay for goods and services in digital silver. It is a low-cost, high-speed, immutable, verifiable way to transmit and transact with silver using modern technology. It has been said that nothing is more powerful than an idea whose time has come. When people come together, powerful things happen, and the world will change for the better. Imagine a better world. The Load community likes that idea and believes that you will too. Take part in the modern silver money revolution by joining the Load community today. Visit www.load.one. Learn more about AGX Pay and the Load silver money system. Join the thousands of active Load members. Get started by activating a member account and put silver to work today. Load, constructing the future of money.
All right, hopefully I know that played okay for everyone. So there's a couple more comments I have in my notes, and that is the ease of transaction. I mean, the problem with going back to a gold coin or gold and silver coin standard in the modern era is how do you make change? I mean, for example, there's about 3 states in the US right now that these states have passed legislation where anyone in that state can use gold or silver for any transaction as long as both parties are in agreement, which is wonderful. But has that really provided a super highway for a lot of transactions to take place in precious metals? The answer is no. And the reason is, how do you account for making a purchase with, say, Silver Eagles? What is your change? What do you get in change? Fiat? Do they have lower value, or do they have smaller coins and that? And the answer is no. So the only way to really do it is to do what we've done now in the modern era, and that's basically put your money on your phone. And with your gold, if you can have money on your phone and it's gold or silver or both, you have a very powerful tool for purchasing power, protecting against inflation, and transacting again, where the merchants are basically not aware of the fact that you're using gold or silver as money, because again, it goes through the same system as the banking system that already exists, and it's only on the back end where you are debited out, again, the amount of gold or silver that's equivalent. The other thing about the old days, let's say when we used, real money, was the fear of theft or losing it or whatever. And that's why the currencies that were gold backed were so popular, because they were lighter in weight. You could change the denomination. In other words, $1 was worth you know, 1/20th an ounce of gold approximately at one time, not anymore, of course. And so that was very good to have a receipt that wasn't money but represented money. A silver certificate, for example, says that this is a silver certificate, and that in the Treasury of the United States there is $1, which is a weight of silver that's backing that piece of paper. And that's the way it used to be up until 1965. So the last thing I want to talk about is the gold silver ratio. As I said before, in the 4,000 years, the gold silver ratio never got above 20. Most of the time it stayed around 12, which was the natural ratio of how silver comes out of the earth compared to gold. Right now, that ratio has dropped to 7-to-1, meaning for every ounce of gold that's taken out of the ground, only 7 ounces of silver are taken out of the ground, which implies going from 12-to-1 to 7-to-1 is that a lot of the easy to get to silver has already been mined and taken out, and that the grades are getting lower and lower, and they are in the silver market, and especially in the gold. So we're seeing the price of gold do fairly well around the upper 1900 level. It will break out, I think, before the end of this year, and once it breaks out above the current high, which I think is 2,078 in US dollar terms, somewhere in that range. Once it gets above that and stays there, and that resistance becomes becomes support, then we'll see a lot of new purchases come in, because the algorithms that are running Wall Street these days will see it as a new high, and they'll come in and buy the new high. So there's a lot there. So I think I've got several minutes left, and I want to turn it over to you and see what kind of questions we've generated. My website, I'll put it up here. It's themorganreport.com, and we have a free letter, which you just put your name and your email here. Hit that, it'll double, you opt in. In other words, it'll send you an email and say, verify that you are you and you want this. There is a subscription service, and it comes in, here's the sales letter, basically. You can scroll down, read the whole pitch. But here's the meat of it. I have a model portfolio. This is how I've invested in the market, and done rather well throughout the years. I do videos during, the letter comes out once a month, but in between the letter, I do whatever trading or updates or whatever by video. Personally, I just do it, none of my staff. Sometimes I involve the staff. Most of the time it's just me showing you what I'm doing. A lot of times it's letters or questions to the editor that I think are of value to the whole community, so I put them up and explain them. We have an email and a text service. We do research. We're probably the only one in the retail sector that does Wall Street quality, in fact, probably better than Wall Street quality reports on these mining companies. Sometimes we're first, and that's great. And sometimes when you're first, it's not so great. One of my favorite speculations really is not doing well at all. In fact, it may go off the board. My rules, if you follow them, will protect you. On these speculations, I tell you right off the bat to bet money you can afford to lose. And then as a member, you can ask me questions, and I guarantee you I'll give you the answer. There's a lot of bonus reports. So that's it. You can do it free for 30 days. And you'll get my latest speculation. You have to read back a couple months. I suggest if you get on this free for 30-day service, and that's the basic one, or the premium here, sorry. The premium is the lowest, mastermind. You will get the ability to go back in time, and you can print them out or whatever. My point being is I do have a speculation. It's a brand new one. It's in the Silver Valley. I toured it. Almost all these speculations, I'm actually on the property, me or one of my staff. So we're really there to see, what's up and which way the wind blows. Because a lot of people in the gold letter news industry just basically are armchair analysts. They never go to the property, whatever we do. Well, I'd say there's a couple. I mean, anything by Murray Rothbard is great. He wrote a book called What Has the Government Done to Our Money? That's a good one. There's another one called Money, Ye Shall Have Honest Weights and Measures. That's by James Ewart, E-W-E or A-R-T. I think it's E-W-A-R-T. Of course, there's the classics like Security Analysis, but that's a huge book and it's a pretty tough read, but it's very good. But I'd say learning why you would want to be in precious metals rather than me just telling you, I think that's important. And that would be basically what has the government done to our money? Anything from the Mises Institute's pretty good to read. So you go to Mises, MISES.org and look at their library. But I think that's a good way to get started, to understand what the stability of the marketplace is under a gold standard and what the repercussions are of going off a gold standard. And Murray Rothbard's probably the best at explaining that.